Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, May the 4th be with you. We are live, and we are starting off another Monday to get ready to analyze the global capital equity markets. We have so many things to talk about, so many things that have happened in the past 24 hours. Quite frankly, so many things that happened in the past 5 hours. If you were up early, got up at around 4:30 today. So we're starting off the week with some at least early morning wake ups. I'm going to see if we can keep it a trend. Usually I wake up at like 6 a.m. trying to see if we can get at least aim for 5. We did 4:30 today. And as soon as you wake up, it's like, okay, boom, there's news. And the news ended up leading to futures going red. We'll talk about what happens when futures going red. Futures ended up flipping green. Bitcoin, as you can see right here, was at 80, fell to 78. Now it's almost back at 79. Bunch of things have happened already in the past couple of hours. And so we'll discuss everything that happened and the implications of what it might mean throughout the day. S&P 500 futures now are starting to go green. We've also got a lot of earnings this week. Obviously, Super Bowl today, Palantir. It's going to be a big one, up 2.3% in the pre-markets, 147.30. We did hit 148. I will be live at 3:45 after hours with Arnie and Amir. And we'll be getting ready to see another Palantir earnings. I believe this is the 15th or 16th quarter that I've done. I started doing it in 2022, 2026. So it's been about 4 years. Very excited for that. And then you also got AMD on Tuesday and a lot of other companies throughout the rest of the week. So there's going to be a ton. I think it's 20% of the S&P 500 is reporting this week. The majority of the Mag 7 and the big tech companies reported last week. So this one's going to be an important week as well. And hopefully this week ends up keeping this momentum going. So we got earnings to cover. We got a ton of macro stuff to analyze, a bunch of stuff that happened already in the pre-markets, and then obviously a variety of things that happened over the weekend that it seems like are positive to an extent. So there's obviously some bearish stuff we'll talk about, but it's looking like it's going to keep the market into this rally mode if the headlines are seen in a more positive sense. And I think there's a bull and the bear case to these headlines that we'll discuss. Overall, market's relatively green in the pre-market. They were a lot more green before some of the headlines hit. Now that those headlines are getting reversed, it seems like we're kind of recovering. AAOI, that's green. Lumentum's green. Tesla, barely red. Adobe, barely red. And now we just got to see if this can continue going into the day. So very, very excited for this. Thank you, everybody, for being here. Lots and lots and lots to discuss and get into. Good morning. Good morning. Good morning. Good morning. Yes, Grab is also today. That is going to be after hours. It's going to be later in the night because it's in Singapore. So like 8 p.m. U.S. time will be 8 a.m. Singapore time, and then we'll get those earnings. And then we have SMCI tomorrow, AMD tomorrow. And then Thursday is going to be absolutely crazy. Thursday, Iran, CoreWeave, Rocket Lab, SoundHound, Mercado Libre, Airbnb, Trade Desk, MP, DraftKings, Affirm, Cloudflare, OpenDoor, SMR. I mean, like it's going to be a massive, massive day for earnings. Wednesday is also going to be pretty crazy as well. So definitely going to be a wild, wild week. And a lot of stuff for us to be able to discuss. Kyle, good morning. Sydney, Cindy, Eric, Georgiana, what's up, what's up, what's up? Thank you all for being here. Helder, Swift, Parzival, Zombie Esther. What do we think of SMCI? Honestly, SMCI has had a nice rebound from the 19s. It's at 27 right now. If the Chinese thing is not that big of an issue for them, aka the GPU, I guess smuggling, then maybe they put up some good numbers. Dell's numbers were amazing. Maybe SMCI has some of that growth, even if their margins aren't that good, and maybe this one rebounds. But a lot of these companies, right, even the more speculative ones, like a Snapchat this week, where a lot of people think it's due for a breakout, like now it's going to be time to see if they can put up some earnings to see if we can get some of that love. Alex, Timothy, Lauren, what's up? What's up? Be careful with your voice this week. We don't want to lose you. Yes, I will be careful with it. Now, I don't think I'm doing like an 8-hour stream like I did last week, so hopefully we should be all right, but definitely a lot to cover. Scam CI. This scam inside thing works so well. Scam it, Scam D, aka AMD. Like, it's just great. The scam joke. It's a good one. It's one of the better insiders that we have come up with over the past couple of weeks. Sydney, Aziz, Vi, Jose, Stano, Lisa Adams, Cycle Time, Aziz, Killa K, Twisty Curl, I'm Beneficial, Let's Go Fam, Andy, Benny, Amit M. Patel. We got another Amit in the chat. There we go. I love it. Profesco, thank you all for being here. All right, let's get started. Let's get into it. Hopefully everyone had a good weekend. I had a pretty productive weekend, got a lot of stuff done. So excited for this week. Woke up early in the morning, got some stuff done in the morning. It's always nice when you wake up early, get stuff done, and have a good start to the day. And so hopefully we can keep that going. Now, given I was up early in the morning, let's start with the first news story. Futures ended up going ugly red. And I kind of saw this happen in real time. It was just funny watching all these charts go red at the exact same moment. And I was like, all right, what did Trump say? What happened? Why are we going down? And this was the headline. The Iran media agency, Fars News, said 2 missiles hit U.S. warships near the Jask Island after it ignored Iran warning. So what is the context of this? Over the weekend, Trump announced Project Freedom. Project Freedom is essentially his goal of escorting U.S. or not U.S., but ships that are neutral inside of the Iran-U.S. conflict. And using the U.S. Navy's protection, they're trying to escort these ships out of the Strait of Hormuz because he doesn't want those ships to be just stuck in the region with nowhere to go, obviously because they can't go to the Strait of Hormuz. And then if they even get through that, you have a U.S. blockade. So the mission he's framing is a humanitarian move as many ships are low on food and essential supplies. Now, Iran said over the weekend, if any U.S. ship tries to, or any ship escorted by the U.S. tries to actually get through the Strait of Hormuz, we are going to shoot at them, which is a hell of a claim to make, because if you shoot at, the U.S. Navy escorting a ship, you're essentially shooting at the U.S. And I don't know if that's necessarily going to go work out for them. So that's what they said last night. Then their media agency said we did shoot at them this morning. And that's when futures tanked. But Trump came out with the U.S. Central Command and said that didn't happen. So they said 2 U.S. flagged merchant ships have successfully transited the Strait of Hormuz and are continuing their journey safely. American-guided missile destroyers are now operating in the Arabian Gulf after passing through the Strait of Hormuz under, quote, Project Freedom. So not only did Trump and U.S. Central Command say that they didn't get shot at, but they actually were able to effectively escort 2 ships through the Strait, proving that this whole Project Freedom thing that they're trying to go for, at least to an extent, ended up becoming real. So it kind of makes sense why Iran said we shot at them and we hit the ships, because they're trying to paint to their people that they are in control of the Strait of Hormuz. Again, if you want to shoot at the U.S., it might not be the best idea, because the U.S. will shoot back. And quite frankly, it would give them the pretext for the justification in order to shoot back. So right now, given the U.S. is saying 2 ships actually did successfully transit through the Strait of Hormuz, we can't literally confirm that there weren't any shots fired. But the U.S. is denying that there were any shots and is saying that we actually got those shots through the Strait of Hormuz. So it seems like a relatively okay update. Oil spiked to 108 when the headline originally came out, and that's why futures really went down. We are still above 100, folks, on oil, which is scary to say the least. There's a lot of context on oil being at these levels that we'll talk about as well throughout the show today. But WTI crude now back at 103 from 108, still up 1% on the day, but it was up 5.7% in the pre-markets, which obviously hurt oil. Brent still at a pretty high level at 110. And so we are once again back in this headline-driven economy where back and forth you see these different arguments going, and you either believe them or don't believe them, but the market is reacting to them. Now, again, the market's been pretty good at not reacting heavily to oil, but if there's actually like serious military confrontation, which was the pretext of the headline that we had today, yeah, the market's going to react. And at least it seems like it wasn't as big of a deal as what it initially came to be. S&P 500 basically flat in the overnight or in the futures market. AMD right there down about 1%. AMD pumped to 365 last night, 357 right here. Again, AMD is going to have a big earnings on Tuesday. You got the Googs, that's basically flat. SMH semis continue to be at all-time highs. That is up 0.19%. Novo, are we getting a little bit of a move right there? Novo is getting a bit of a move, 1.73. That was up 4% on Friday as well. So that was the headline in the morning around oil. And, most of it has been relatively calm since this headline around the U.S. Central Command saying that the Navy operation worked. Question is going to be how much the market interprets that as actually being true. Buffett, over the weekend, you had the Berkshire Hathaway annual shareholder meeting. Buffett was in the audience this time. Because he's not the CEO of Berkshire Hathaway anymore. And he had some interesting comments. There's a couple things of what he had to say, which is going to kind of frame some of the different bearish perspectives you're having right now in the state of the market.
I compared the markets to a church with a casino attached. And people can move between the church and casino. And I would say there are more people in the church and more people in the casino. But the casino's gotten very attractive to people. If you're buying one-day options or selling them, I mean, that is That's not investing. It's not speculating. It's gambling, just totally. So we've never had people in a more gambling mood than now.
Now, what makes his comments so important, at least in terms of how people are analyzing this, is that Berkshire Hathaway revealed over the weekend that they are sitting on $400 billion of cash. And if you look at some analysis right here, in 2006, if you invested $10,000 into the S&P 500 or Berkshire Hathaway 20 years ago, you would end up with exactly the same return, 694.6%, $79,415, which means over the past 20 years, Berkshire Hathaway has not outperformed the S&P 500. Over the past 10 years, it has, largely due to Berkshire's stake in Apple. But you've got a lot of people wondering, wait a second, what's going on here? Why is Buffett holding on to this much cash? Why is that capital not meaningfully being deployed? And when he was asked, do you think we're in a good macro right now? Buffett basically said, in the past 60 years, there's only been 5 years that are juicy times for Berkshire to go shopping, and this is not one of those years. And as a result, you've got Berkshire Hathaway right here basically claiming, we do not think this is a healthy market to invest in. Which begs the question, and I asked this question last the future stream. I'm going to be asking this question to everyone here today, which is very simple. Do you think we are in a healthy market? Simple yes or no. Do you think this market momentum that we've seen is healthy or not? Do you think Buffett's going to deploy that into the S&P? They likely wouldn't. They would probably try to pick stocks, whether it's Domino's, UNH, maybe more American Express, the sort of core holdings that they have. I wonder if they double down on those or if they find an Adobe or a PayPal that they get excited about. But, when Berkshire invests, they're investing, like when they go in heavy on a position, Apple, they put in $35 billion, I would imagine, which is now worth almost $200 billion. I would imagine if they're looking for that type of investment again, they would be, putting up 30, 40 billion bucks. And quite frankly, without Apple, they would have underperformed the S&P over the past 10 years. So I think the overhang on Berkshire is that they need their next Apple. What is their next Apple? As much as they try to say Apple's not a tech company, it's a consumer hardware play. At least that's how Berkshire justified investing in it in 2016. It's obviously a tech company. I think they're going to need to find another tech company that is as diverse as Apple, with the types of shareholder returns via dividends, buybacks, et cetera, that Berkshire is used to in order to grow earnings. And, quite frankly, I think one of the only stocks that's out there in tech that actually offers that is Amazon. Now, Google's the same, but they already did a $5 billion stake in Google. So I wonder if they up that stake. But it does feel like Amazon, given the diversity of the business over the next 10, 20, 30 years, if Berkshire wants to hold it for that long, will be that thing that gets them to outperform. At least that's my top of the mind opinion. But they're going to need to deploy that capital somewhere, because if this bull market continues in the way that it is going to continue, then I would imagine, you're not going to see as many shareholder returns on Berkshire Hathaway. And speaking of Berkshire Hathaway, it brings up the discussion around GameStop and eBay. GameStop offered to buy eBay for $125 a share. GameStop right there, down about 5% in the pre-markets. eBay is at $110. It was at $114 last night. This is a bit of a weird offer, and the reason the offer is weird is because there's not really a lot of explanation for how it's actually going to happen. So here is a video here of him, Ryan Cohen, the CEO, on Squawk in the Morning. He kind of didn't seem like he even wanted to do the interview, but this is what he said when they were asked how this buyout will be facilitated.
I think we can start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
I hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
It's half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the to the price that you're offering.
So,
Brian, that's a pretty
what do
straightforward
you-
question.
so what
I
are you
don't get
saying?
it. Like, where's the rest of the money coming from?
Shout out to Becky. She's like, I'm too old for this. We're not tolerating this nonsense, Mr. Ryan Cohen. Give us an answer here.
Andrew laid it out pretty
I-
clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done. But the full details of
Massively
the
dilutive.
offer are on our website.
Yeah, as Mike says right here, he didn't want to say it, but essentially he's saying I'm using retail as exit liquidity. I mean, look, it's very simple, right? Like the offer is for $55 billion. They have $9 billion in cash. They have a $20 billion line of credit from TD, which would be issuing debt. So you're still short about, what is that? 20 billion, 15 to 20 billion, which means you're going to have to dilute shareholders to the tune of 15 or 20 billion in order to be able to generate that capital. And that is why I think GameStop stock is actually down in the pre-market. It was up a lot on Friday. It was also up a lot last night. But after that interview, I think, a lot of people realized, okay, maybe this is not going to be the type of acquisition that is easily able to be done. Also, Becky asked him another question right here around his compensation and how this ends up playing out. So let's pull this up right here where, specifically they were asked, do you get paid if you just combine the two companies and get to a market cap, even if it's inorganically getting to that market cap?
$2 billion in cumulative EBITDA. Is that the case, that this is a bid to make sure that you're going to get paid in that first tranche to boost the GameStop's market cap?
I mean, I obviously want to build something much larger, but I don't benefit unless shareholders benefit. So my compensation package is aligned with shareholders, and I want to build a much larger business.
So just larger means successful. Larger means aligned with shareholder interests.
Larger means maximizing shareholder value and increasing earnings.
Yeah, Ryan, just to touch on that point, I don't know all the details of your compensation package. Maybe you can clear it up for us. If you get to a larger market cap by taking two smaller market cap companies and merging them together, or swallowing a much bigger market cap company, does that count? Because those shareholders wouldn't necessarily see the same gains that they would if you just grew market cap by growing operating earnings. I don't know what the details of your compensation are, though, directly. Does it matter if you swallow a bigger company and that's how you get the market cap, or do the shareholders actually have to see the same gains?
I don't benefit, and I'm aligned. I'm aligned with shareholders. So, and unless our market cap increases substantially and earnings increases substantially, I don't get any salary, any cash, no golden parachutes, nothing. So it's pretty aligned with shareholders.
But the
there's no
individual
free lunch here in
shareholders
this
don't see that
situation.
huge benefit if you're combining a lot more shareholders in with that and then diluting shareholders by issuing more debt on top of it. You see what I'm saying? I get it. If you grow your market cap by 10 times, sure, I think you should absolutely get gains, but not if you do it by swallowing a bigger company and just kind of absorbing all of that into it too, because individual shareholders didn't see necessarily a huge gain from that.
If I don't hit the thresholds, then I don't get anything.
Now, again, that's not answering the question. Like, if the goal is, I'm just making this up, you have to get to a $100 billion market cap to unlock a lot of rewards from a compensation perspective, and you combine two companies and the market cap goes up to 100 billion. If you're doing that inorganically, aka issuing debt and diluting in order to combine two companies, create a merger in which the market cap has to go up, right? Because you're combining two companies together. If that, like the internal nuance of that question is that or an organic way to grow earnings, which is a inorganic way to grow your compensation, or is that just a financially engineered way to be able to achieve certain milestones? And there was really no answer to that. So it's a very weird acquisition. The Burries of the world have said Ryan Cohen is a mini Buffett, and their argument is that Ryan Cohen's understanding of business will allow him to create a conglomerate that will rival Berkshire Hathaway. I mean, Burry has literally said he thinks Ryan Cohen can outperform Berkshire Hathaway over the next 40 years if he continues to buy up these assets and merge them with the core business. It's more a bet on Cohen versus GameStop, I think, is Burry's bet. But regardless, GameStop is the vehicle to access that bet. GameStop right there down about 5%, eBay up about 6.7%. So eBay and GameStop are probably going to have a lot of inflows and potentially outflows, definitely option volume over the coming days. And, we're going to see if those stocks end up becoming a lot more important. Bessent, he's on live right now. Let's go to him real quick, and then we'll get into some of the other headlines that we had this morning as well.
The Iranian economy is in free fall. And to be clear here, this is an international humanitarian operation. We are opening the strait. The Iranians do not have control of the strait. And for him to say that, it's sad he believes the Iranian propaganda.
There was this report from the overnight that the United States Navy, in a measure of good faith, returned an Iranian vessel, not to Iran, but to the Pakistanis. I think there were at least a dozen Iranians on board, and it was seen as a sign of a good faith. Was Project Freedom done in coordination with Iran today?
Absolutely not. Project Freedom is something that's been in the works, and we would encourage the Iranians to let these more than 300 vessels leave. That they can fire on them. They're I think it's called the Mosquito Navy. Is being swatted. Numerous ships, maybe in double digits, have been destroyed. And the U.S., we are just firing if fired upon. We are not the provocateurs here. But if the Iranians want to escalate here, we are willing to escalate.
So this is clearly a test of Iran as well as we speak, correct?
It is a test of Iran. But Bill, again, this is a ragtag band of pirates that the great U.S. military, we've destroyed their Air Force, we've destroyed all of their conventional Navy. Their battle lines along the strait have been destroyed. So we are saying, for the good of the international community, let these ships out. And we are expecting our international partners to engage in the same thing. Now would be a good time for our international partners to step up and put pressure on Iran.
So we're going to see what happens throughout the coming days with this idea of Project Freedom. Obviously, Trump claiming this morning that 2 ships were successfully able to go through. There were some good headlines over the weekend that the Iranians want to negotiate and Trump is reviewing different offers. And so that stuff is kind of calming down the equity markets. The oil markets are not calmed down by this, with oil still above 100. The equity markets, once again, refusing to care about oil being above 100 and trusting that this war will inevitably come to an end. I think kind of the core bear case that I looked at over the weekend, I wrote an article, I will link it right here on Substack, and the title of the article was the stock market is ignoring all of the bad news, but maybe for the right reasons. And so it's kind of a deep dive on the bull and the bear case on what's happening in the market. There's 2 kind of core things that I think is going on right now, right? The first is obviously oil above 100, which, remember, stocks in 2022 fell 19.2% and oil was at 120. We are not that far away. So the fact that we've normalized S&P 500 gains at all-time highs with oil still at this level, it's weird to some people, right? And you can't say it's not weird now. There's a reason why people will say we continue to buy stocks, which is, in my opinion, earnings growth, which we'll talk about. But at its core, if I told you S&P is at all-time highs, oil's at levels it was at in 2022, a lot of people would find that hard to believe. The other reason why I think some people are afraid is this damn 10-year is not going down. 4.4%. This is where we were. We were a little bit above this back in April of 2025 when the S&P was down 30%. So the fact that our debt financing has not really gone that much better, and the reason you might be asking, well, why are people selling off bonds? As you sell off bonds, yields go up. That's the inverse relationship. The reason goes back to oil. If oil is up and the market thinks there's going to be more inflation because of oil, and quite frankly, oil was 75% of the reason for the increase in CPI, PPI, and PCE over the past month of March. If that doesn't come down, which it did come down in April for like a week, 2 weeks, we were at 80, 85, and now it's right back up, then inflation will be elevated, which is not good for rate cuts. Barclays came out this morning and said we don't see any rate cuts until 2027. Goldman's a little bit more dovish. They think we'll get a couple by the end of the year. And it's obviously not good for the bond markets and the credit markets that are screaming right now. It's also not good for Japan. Take a look at this chart. I thought this was incredible. It is very obvious the Bank of Japan is intervening. Every time the yen starts to spike, they come in and they buy up enough yen to keep that thing stable. The only other way to stop it from going crazy is by raising rates, but Japan theoretically could get into a pretty ugly recession if they raise rates. So they are dealing with inflation on one hand, they're dealing with not having a recession on the other hand, and so you've got a lot of weird stuff happening in the Japanese credit markets as well. You put that together with the move in our US 10-year and 30-year, which is now inching 5%, along with oil going up. And then the other big reason I think some people are just skeptical on the nature of this market right now is because semis are the most overbought since 2017. When you look at a chart of the SOX, it's just gone absolutely vertical. And we know the stocks in here that have just gone crazy: Intel, Micron, SanDisk, etc. If you take apart the earnings justification for why those companies are going up, which there's plenty to praise when it comes to the earnings, then it just looks like we're melting up parabolically in the face of a lot of things that probably should not allow us to melt up, aka oil and the credit yields, etc. And that it's all fake, and that it's weird, and that it's scary to invest in this type of environment, buying these things at all-time highs. That is the bear case, which is also why I think, 56% of you in the chat said this is not a healthy market on the poll. I mean, there's definitely some level of skepticism that's going on right here on, if we 52% think we're in a healthy market. But the way to fight back against that, we talked about this a lot last night, the way to fight back against that argument is actually pretty simple. And I don't know if the market's going to continue fighting back against it, but there is a simple term that easily makes the case for why the market can continue going higher, and that's CapEx. All the big tech companies crushed it. CapEx, Morgan Stanley increased their estimates. They said $600 billion last year. Now they're expecting $1 trillion in 2027. That is a 40% increase of CapEx that they're projecting for 2027. We've had the best earnings growth since 2021. We are going to come in at 28% if the companies continue to beat at the levels that they're beating at right now. Even if you take out the other income from an Amazon or a Google, for example, for their SpaceX, OpenAI, Anthropic stakes, which is what helped them to really beat on those EPS estimates, we are still having one of the best earnings that we've seen over the past 5 years. So is this market necessarily super healthy given all the different things we've laid out for why it's a little scary? Birds saying, hey, new bird AI, and then boom, the stock goes up 6x, right? Like, is that healthy? No. But then when you look at the earnings growth, that is, and again, it doesn't have to be that complicated. You can keep it very simple. If stocks are putting up good earnings, the market can overlook the fears of a variety of different macro concerns if those earnings growths are, or if the earnings is growing and the premium you're putting on those earnings are at a reasonable multiple, which I would say Microsoft, NVIDIA, Google, Apple, even now with their increased growth, these are not multiples that are unbelievably hard to stomach. And if the multiples aren't that crazy to stomach, and then you've got companies like Anthropic going from $1 billion in ARR to $44 billion in 15 months, which means they need to spend more CapEx, that's why I think you get the market that we are getting right now. Which obviously makes the market very excited. UAE just put out an update, says an Iranian drone struck one of their tankers in the Strait of Hormuz. UAE also is issuing a potential missile threat alert to the citizens of the region right now. They just put out, UAE strongly condemns targeting of ADNOC national carrier while transiting Strait of Hormuz. The United Arab Emirates has strongly condemned and denounced the Iranian terrorist attack involving 2 drones that targeted a national carrier affiliated with it as it transited the Strait of Hormuz. Maybe those were the ships that the United States said officially crossed through the Strait of Hormuz. South Korea put out a headline saying, we are trying to investigate if one of those ships is our vessels. It looks like it might be UAE ships. And if the UAE is saying that there were drones that targeted it, well, if that's the headline that we got in the morning that got futures to go down, and the US came out and said no drones or no shootings happened against our ships, you've got 2 kind of contradictory claims right here that are happening. Julian says no alerts here so far. Yeah, we're seeing a couple tweets of people posting screenshots these emergency alerts that people get on their phones. Says, due to the current situation, potential missile threats, immediately seek a safe place in the closet, secure buildings, steer away from windows, doors, and open areas. All right, we're going to see how much the market cares about this. But then again, right, going back to this chart, the market doesn't care that much about it. I mean, even if the market does care about it, they look at Anthropic's numbers and it's like, wait, maybe this stuff doesn't matter as much. So if you were up early in the morning, you saw futures go red, and not bloody red, but red enough to make you think, okay, something's happening. And, you know, within literally 20 minutes, that flipped after a counter update. And even if that counter update is not fully accurate, you could argue the first headline was not fully accurate. Enough back and forth gets the market to just ignore it and potentially move on. Julian said, okay, the alert just came in. Yeah, there you go. Stay safe, man. Hopefully there's nothing too crazy there. But, you know, the fact that it's 6 weeks later and this war is still continuing and there's still different proxy attacks, obviously, is not the best thing. South Korea just says, yes, one of our vessels has been hit by the IRGC in the Strait of Hormuz, according to the Federation of Korean Seafarers Unions. So now the UAE and South Korea coming out and saying two of our vessels, South Korea saying one of our vessels, the UAE saying two of our vessels have been attacked by the IRGC. We'll see what the U.S. Cent Command ends up saying about this as well. Okay, so those were the bear cases, right? Oil, proxy wars going back and forth, these different attacks that are happening. The bull cases, once again, continues to be earning. By the way, retail is absolutely loading up on the semis. SMH record inflows over the past 5 months. You can see that right there on the screen. Retail has had a cumulative net buying of about 1.2 billion on SMH. And then if you go further down, Micron in and of itself has had 3 billion. And then you have Western Digital, SanDisk, Seagate, Lam Research, and AXTI. So retail is specifically buying the memory stocks that are within the semiconductor names. On top of that, Goldman put out a study over the weekend around photonics. I know a lot of people have been learning about photonics. There's been a lot more research that has been coming out on photonics, Light, Lumentum, Coherent, AAOI, all these different names that are out there. Goldman said, we think this market is I believe it was, let's get the exact estimate right here, but multi-$100 billion market. It was a very long report they put out on it. And this is one where retail honestly has caught on to the photonic story way quicker than the street. And as a result of this argument on how big photonics can become, you've got all the photonics names that are now pumping, because you had an institutional research firm come out and say, hey, we think it's going to be a very, very big thing. I mean, they even put out this chart right here, as you can see, with all the different tickers that people have been talking about when it comes to photonics. Now, Jensen was obviously very early on this because they invested $2 billion into Coherent and Lumentum. And that's also, I think, part of the reason the S&P 500 accepted those two companies pretty quickly. But you've got Nokia up there, Coherent, Broadcom, AAOI, GLW, Corning, a lot of these names that have been kind of going a bit more viral. Poet is part of that ecosystem. I don't know if, Poet's going to be the massive winner. It's one of the only photonics names that hasn't done anything, but it bottomed at kind of around 650. Now it's at 750, obviously down from 17. But optical communications and memory are the two core elements of this AI supply chain bottleneck that seems to be breaking out. And the fact that SanDisk went down 8% and now is up 8%, or it was up 8% on Friday, up a little bit in the pre-markets, crossed $1,200. It's just incredible. I mean, it's one of those things where either you look at it and say, this is the toppiest thing ever, and this is going to collapse pretty ugly on any bad memory headline, or you believe all these memory executives. SK Hynix was up 11% last night when the Korean markets open, and say the earnings estimates are going to go up, the forward multiple will continue to go down, and the CEOs of these memory companies, Micron CEO, on Friday was at a conference and said, we are not late stage cycle, we are a pivotal part, and we are early stage for an entire industrial AI infrastructure build out. Now, obviously, the guy is talking his book, but if you believe him that we are actually early, then Micron probably deserves a forward PE that's higher than 7. Micron right there, 556 in the pre-market. That's up 2.54%. Qualcomm was not on the list. They're not really an optics play, although they're more of a CPU play. That stock down a little bit, although it's up a lot from the 130s. And so I think they're going to have to kind of disclose more about the relationship with that hyperscaler deal that they had to see if this ends up continuing. So that's the question that I have for everyone. Do people believe that we are in this massive optic super cycle and memory super cycle? And if you meaningfully believe that, then the question is going to be, okay, how large does that industry become, and does oil even matter at that point? This is a quote from the article. We expect significant EPS upside for key beneficiaries across optical modules and engines. We remain bullish on our optical and PCB coverage, including our buy rating coverage of all the different names. And you can see those names right there. I mean, basically Goldman just validated the entire industry over the weekend. And, you know, this is an industry, again, retail has been pretty closely covering, especially because a lot of people felt that, you know, they missed memory. So they wanted to be next on the next revolution. And if that revolution is optics, which again, there's a lot of different bear cases to like how much that has capacity to grow if there's different innovations within different chips. I mean, the fact that NVIDIA bought Grok to improve their LPU architecture on the chips, you have some people saying that's a bear case for memory in and of itself because it makes the chips more efficient and not necessarily needing as much HBM. Now, that's widely disputed as well. But one bad headline on these broader bottlenecks maybe makes them not a bottleneck. But if the bottleneck thesis continues, then obviously that growth probably continues as well. Yeah, LWLG, this is another one in that photonic space, 1725, that's up another 6% in the pre-markets as well. It's also a little bit bearish when the institutional guys come out with their research because, you know, that largely means the move has been done and, you know, a lot of the alpha has already been achieved. So that, yes, is going to validate a lot of the thesis. The question is going to be, is there any alpha left for that thesis, or is the alpha going to be worth the risk reward? You know, going after a lot of those different names. NVIDIA, a lot of people ask, why is NVIDIA down? I see a lot of comments about why is NVIDIA down. I think there's a couple reasons. Number one, Cerebras is getting ready to IPO. They're going to raise about $4 billion. I think the valuation is going to be something along the lines of 20 to 30 billion. I do not know enough about Cerebras. I know that they have a deal with OpenAI and they make some of these custom chips. However, Cerebras has been painted by the media as the NVIDIA killer. Again, I really have not done research into these guys. I don't even know, quite frankly, anything about the innovation in their technology. But I think this is part of the reason the street's getting a little, not bearish, but just, you know, concerned about different elements of NVIDIA. Obviously, NVIDIA stock has been stuck for a while. The fact that it gave up the 200s last week is also kind of concerning. And then to a lesser extent, I do think this is something that maybe not affected NVIDIA because NVIDIA is just too big for this to affect it, but this still matters. One of the biggest NVIDIA bulls, one of the earliest NVIDIA bulls who has a $20 trillion target on the company by 2030, Beth Kinding, sold 75% of her NVIDIA. I'll link the article right here. I read the article last night, but essentially the thesis of the article was we want to buy custom ASICs and companies that are more rooted in the inference part of the stack when it comes to the overall AI ecosystem versus just the training part of the stack. And again, they're up, I don't even know how many thousands of percent on NVIDIA, but 75% is a hell of an amount to say. I mean, I could understand 10, 20, 30%, but that's like a significant reduction of their NVIDIA stock. And this is, you know, she's been one of the biggest bulls. The article right here goes into a lot of technical analysis around NVIDIA as well. And, you know, whether you believe in the TA or not, their argument is that the TA is horrible on NVIDIA and you just don't see buyers coming in at the levels that they should be coming in. And they think there's one more flush, potentially 220 to 230. And then after that, it's downhill. Now, it's hard to imagine that from one perspective because every AI stock is running except NVIDIA, but NVIDIA is kind of the reason for a lot of these AI names to get momentum, but maybe that's being questioned given, you know, CPUs might be a bigger reason than just GPUs, given the advance of what we've seen from Intel earnings. And so there's other reasons why the AI stocks are running outside of NVIDIA. But the point is, NVIDIA has kind of kicked off this whole revolution. Obviously, it's worth $5 trillion, but it's not getting the most benefit from the amount of money that is being spent by the hyperscalers. And I think this was a good point on the All-In podcast as well over the weekend. Essentially, the money is not flowing into the hyperscalers. The money is flowing out of the hyperscalers, and people are chasing the hardware companies that these hyperscalers are spending all their money on.
It had these very asset-light business models, right? You just build some more software and it just has all this leverage and it all just kind of worked, except maybe for Amazon because they needed physical infrastructure for warehouses and delivery and whatnot. But by and large, it was a very asset-light investment cycle. Now, all of a sudden, the pendulum is swinging violently in the other direction. And there's something that I think people misunderstand, which is as it moves back to these asset-heavy infrastructure investments, the hyperscalers are signing checks that, I mean, I suspect their body can cash, but there's a world in which they can't. I'll give you an example. You know, when Microsoft convinced the owners of 3 Mile Island to turn their nuclear site back on,
Yeah.
do you know what their forward purchase agreement was? It was for more than 2x the prevailing spot rate for energy. More than 2x. The problem is that's not for an enormous percentage of their overall energy needs. So if you play that out and you think these 5 or 6 companies all of a sudden are not just spending, Jason, $700 billion a year of CapEx, which they are, but then from an operating cash flow, they're going to be spending 2x the prevailing spot rate because they just want guaranteed demand into the future. Where's all this cash going to go?
He goes on to say that he can't make a valuation case for a lot of these companies because they're spending all this cash. My disagreement with that is that there will be a day where the hyperscalers stop spending as much as they're spending on CapEx. And that is when their stocks are going to literally explode, because the day Google says, yeah, we don't need to spend $190 billion on CapEx anymore. It won't be good for the Microns of the world, but it will be really good for the Googles of the world, the Metas of the world, the Microsofts, because all that money is going to go back to shareholders and share buybacks, dividends, and obviously free cash flow yield. So the multiple compression that we're seeing on a Microsoft or a Meta, I think, is the opportunity, not the thing to be afraid of. But it's the long-term opportunity. The short-term opportunity is that if Meta is going to be spending another $10 billion on CapEx, which is why it fell $200 billion in market cap, apparently, and that CapEx directly or indirectly will find its way into the Amcors of the world, the Intels of the world, the AMDs of the world, the Microns of the world, then the short-term opportunity is to buy Micron, not Meta, even though the long-term safer play is obviously probably going to be Meta over a Micron. And I think that's where the market is divided on right now. You either believe that, you know, Micron is a way better buy than Meta right now, and Micron's going to 800 while Meta stays stuck at 600 over the coming months, or you think Micron is unsustainably benefiting from this massive memory boom and bust cycle, which is inevitably going to bust, and you don't know when it's going to bust, and as a result, you're afraid to bet it, but you know Meta is probably never going to bust in the way that a super cyclical semiconductor name can bust, and you're on the sidelines of it. I think that's the two different perspectives that exist. Obviously, there's different agreements on those perspectives, which is what makes a market. And the bulls are winning right now, which is why these semiconductor names have been doing as much as they're doing. Yeah, DRAM, this ETF is a massive ETF. If you don't want to pick a memory name and you just want to go long memory up another 4%, it's up 50% for the year, already has a couple $1 billion in AUM. This is another easy way to just get access to memory by not having to pick. Now, granted, if you're buying it at these prices, you're functionally buying all the memory stocks at their current prices, even if you're not literally paying $500 for Micron per share. You're paying the appropriate proportional allocation of that inside of DRAM. So if those names go down, DRAM will go down, but that is another ETF that has gotten a lot of momentum. 10-year just crossed 4.4, looking kind of ugly here. Let's see in the next 2 minutes when the market opens, if these 10 years and these if these 10-year and these Japanese 5 and 30 years actually matter to the market, or if this is going to be a bit more ugly than not. AMD, again, it was up last night, ended up going just red in the pre-markets. Now it's flipping green at 360. Lots and lots of these semi-names have been making their move. First week of May, we're going to see if the semiconductor names can keep this market going. Obviously, Palantir today, that'll be a big one. I talked about it last night throughout the show. We'll talk more about some of the Palantir earnings previews. I think they're going to crush it. We'll see if software can get a breakout. That would obviously be very good for Palantir. Palantir already getting a little bit of a breakout in the pre-markets. And hopefully that one crushes. You got AMD tomorrow. And then we'll figure out where this market wants to go. 5 seconds. 5 seconds before everyone officially wakes up. Monday, May the 4th be with you, 9:30 a.m. The stock market is now open. All right, wake your asses up. Let's get into it. Palantir opens up at 148. 148 on Palantir. That's up about 2.64%. Qualcomm up 1.4%. Micron up 4%. SanDisk 3.8. SanDisk continues its run. Again, it fell below 1,000 on those earnings, rebounding. 1,200, got 1,200, got $1,400 to $2,000 targets across the board on Friday on those earnings. Again, they beat by 80%. The numbers were incredible. That's up 3.2% as we start the day. Meta goes red. Microsoft goes red. Exactly what we were talking about right before the bell. The hyperscalers that are spending all the money that will inevitably benefit a Micron or a SanDisk are not getting the flows of capital. The Microns and the SanDisks are, and that's how the market is rewarding and punishing these different companies that are allocating capital. Micron up 4.5, SanDisk up 3.5, Novo's up 0.5%, Amazon back to 270. That is green. Nebius, which had a good headline over the weekend. Apparently, Microsoft paid for their deal 40% on the prepay, which I think is very bullish because that means Nebius doesn't have to dilute shareholders or issue debt to be able to raise 40% of the working capital that they had for that deal. Someone found that out in one of the 10Ks, and I think that is a very important detail. Nebius right there, 161, back up 5% to start the day. Bitcoin did hit 80 last night. Bitcoin just below 80 right now, 78,894. That's really good for Hood. At 76.28, that's up 3.4%. Also very good for MicroStrategy, which is actually up 17% on the year. So MicroStrategy has not had a horrible year. 181, that's up 2.2% as well, kind of bottomed around 120. Nubank, 1434. That is red. Galaxy, that's up 1.7%. AppLovin, 463, that's up 1%. Roku's up 0.23. CoreWeave, 123. Following Nebius right there, that's up 5%. IREN, 47.25, that's up 4%. Zeta, are we getting a dump? We are, yeah, I would say that's basically a dump, 1804. This is my fear with the software companies. No matter how good the earnings growth is, no matter how good the revenue growth is, maybe the street doesn't care. Obviously, we saw that with some of the other names that reported, but Zeta right there, $18. That one's down. Salesforce up a little bit. ServiceNow, is that up a little bit? ServiceNow actually getting a little bit more of a breakout, 192.40. Nebius, 163. All-time high is 168. Got to see if that breaks up. Amazon, 271. That continues to go green. Bloom Energy, which actually fell to 270, is now looking to go to 300. So the dips here are very short and far in between. 268 it hit last week from a, if you want to call it 290 to 260 a dip, but that was the dip. And now back up to 297. Reddit had a great quarter. I went through their numbers again over the weekend. It was just a good quarter. It was just a really, really good quarter. It makes me think AppLovin's going to have a good quarter as well when it comes to advertising. But I mean, Reddit, AppLovin, and Palantir are the only companies that are growing above 70%, which is part of the reason I think Palantir is going to crush it today, because at the end of the day, yes, they're a software company, but if you grow at a level that you need to grow at, and I think Palantir could come in at potentially 80, 85% growth, Street's only expecting 74%. That's what the Street needs to once again believe that, if we're betting on growth, Palantir is one of the companies that can deliver that growth. Oracle, are we going up? We are going up 3.5%, 4%. So you've got the neoclouds continuing to make a broader move. How about Intel? This was 100 last night, 97.60. That's down 2.3. So Intel coming down a little bit, only 74%. Yeah, only 74. But, if the Street's expecting only 74%, they got to be able to beat that. Wow, Zeta, quick recovery, 18 to 1850. Sorry, it went from 1850 to 1794, right back to 1850. So that was a pretty violent move down, as that one's trying to recover right there. Amazon, 272. That's going up. Robinhood loving the Bitcoin momentum, 77. That's up 5%. Salesforce up 1. ServiceNow up 2. IGV, are we almost at 90? IGV, 87.93, just a couple bucks away from that level. And Micron continues to go up, $570 for Mr. Micron. Where is crude? It was at 103. Let's pull it up right now. Oh, Xandu. Does anyone know why this? Well, I kind of know, but I don't know that much about why this is down. This thing is down 65%. A bunch of people were talking about it last week. Quantum Canadian company, XNDU. I believe they issued a lot more shares than expected in their recent dilution this morning. That I think that's the reason this thing went down. I mean, it was $7 on April 8th. It went to $42 on April 16th. And now it's back at $12. Yeah, mega dilution, right? Okay, so there you go. I looked at a little bit of their filings this morning, and it looks like it was just way more shares than expected. Crude almost red, 102. If we lose another 15 cents, we're going red on crude. Robinhood, 77.25. Palantir trying to go for 150. Circle's up 9%, Coinbase up 5%. So all of those assets loving the Bitcoin move. Bitcoin has hit 80,000 for the first time in a couple months. So I think that hopefully is a bullish signal. Nebius 168.71 is the all-time high. So it has not hit all-time highs yet. It's about 70 cents away. But we did touch 168 so far. 52-week high I have is 168.71. BlackBerry, that is up 10%. The Wall Street Journal put out an article over the weekend about BlackBerry. This is one we talked about last week. A lot of people think of it as a phone company. It's now software that is inside of 270 million cars. They have a partnership with NVIDIA. I think it's something people should keep on their watch list. It's definitely a name, even as a trade, that can take off. Nokia as well has been getting a lot more buzz, down 1% right here, went from 10 to 13. NVIDIA owns 2.9% of the company. They have a partnership with Anduril, and they're getting a lot more people thinking that the chart looks incredible. I mean, there was 700,000 calls traded on Friday on Nokia, 100,000 puts. So the put call ratio is pretty skewed to the calls, and a lot of that money is betting on it making a move at least to around $20. AMD going red, 1.82%. That's down. Did NVIDIA crack 200? Okay, nice to see NVIDIA coming back to 200. Wow, Palantir going for 150. She is trying to go for 150 here. 201.40 on NVIDIA. Nebius 20. Wow, 9% move on Mr. Nebesis here. I mean, let's see. Let's see if this one breaks. Oh, there it is. 169.45. That's all-time highs. Just busted through 168.70. All right, 170. Let me check resistance on Nebius. The remaining Nebius shares I have never sold calls on, partly because I sold half my Nebius way too early, so didn't want to cap the upside on the rest of them. And so let's let her run. Let's go to 200. Let's go to 200. 170 has 24,000 shares. 24,000 shares sitting at 170. Robinhood 77.60. Soundhound continuing that move up from last week, 1.73. How about Iren? Iren also, let's see if Daniel can make a move for us on Friday and give us some green. Is SoFi moving? SoFi is moving. That's up 2% as well. Wow. We're making a pretty big move across the entire market. The things that are down, Rocket Lab, Space not catching a bid, Broadcom selling off a little bit, Viavi, which had a massive earnings move last week. Can't blame that one for taking a breather. Celsius, that's down 1%. Adobe's actually going red. ASTS going red. Fastly, which also had a big move last week. That one chilling out. JetBlue, that's up. Oh, Spirit's done. Spirit's bankrupt. The United States decided not to save it. So Spirit is officially going out of business. And yeah, sucks to see them lose that many jobs. But unfortunately, could not come to an agreement with the U.S. Wow, Nebius, 170. 170 Dolores on Mr. Nebius. I mean, this has got to be one of the most incredible stocks we've had this year in the broader neo cloud sector. I mean, this thing does not sell. Your dip was at 130. Your dip was at 130. Micron, your dip was at 520. It's at 574, up 6%. As this one continues to go green. Is there any news on the neo clouds? I mean, there was news on Nebius in the fact that people found out Microsoft paid 40% prepaid for their deal, but outside of that, I don't think there's any made. Iran had a news on Friday. They energized Streetwater, which I believe is one of the names of the data center or the facility. I don't know exactly what it is, but that was the headline. They secured more energy, from my understanding, was the takeaway, and maybe that's why that's up 7%. But overall, I think the market just continues to be bullish. The data center stack. JetBlue, that's up 3.8%. S&P actually Streetwater. Yeah. S&P 719, that's down. Google's also down 382. Did I say Sweetwater? Oh, did I say Streetwater? Oh, it is Sweetwater. Okay. Yeah, let me pull it up. Let me pull up the exact headline. But that came out on Friday, which the street got excited about. MXL, that is also up 6%. This was up 50%. Iran announced a successful energization of Sweetwater 1, 1.4 gigawatts at a data center in Texas. So that was the news on Friday. If they could follow that up with a new hyperscaler deal on Thursday, I think the street would be excited about it. Intel is down Qualcomm is down. Qualcomm down 5, AMD down 3. Okay, so your CPU stocks taking a bit of a beating here. Not sure exactly why, but obviously the charts have gone crazy. Maybe that money rotating a little bit into some of the crypto plays, to be honest, as those are definitely getting some momentum. Amazon 271 pounds here, trying to go for 150. Trying to go for 150. Software is also up. And by the way, I mean, if you haven't looked at a semis over software chart, it is very compelling for the thesis to be made that software probably deserves a premium relative to semis, given the magnitude of the run. Now, if the market continues to think software is dead, then that won't happen. But I mean, it just looks like you could argue that software should catch a bid. I mean, take a look at this chart. Hedge funds are, as a percentage of total holdings, massively long semis and massively short software. I mean, if there was any time for that to flip, it would be now. And even if semis take a 10% haircut, most of them are still going to be up a lot for the year. If software gains 10%, most of them will still be down 30 to 40% for the year. So, or 30, 40% from all-time highs. So maybe we do see a little bit of a flip into some of the software names. Wow, Nebius 172. Not stopping at all. Once again, making the move higher and leading the neo clouds as CoreWeave participating. CoreWeave is 127. We haven't seen 127 in a minute. Last time was November 2025. November 2025. Last time we saw CoreWeave anywhere near the 130s, and around that time it kind of gapped up to that 187 level. Micron as well, 580. Either you believe this is a parabolic move in the final wave of a melt up, which I know a lot of people have theorized over the weekend as well. Stage 5 in their Elliott waves that are going massively parabolic and eventually will result in a catastrophic downturn. Or you're on the side that no, memory is a bottleneck, compute is a bottleneck, and Meta and Microsoft have negative free cash flow. Even though CoreWeave and Nebius don't have profits, they are showing way more growth, and that's where the street's rotating to. And quite frankly, that might be how the thesis plays out for the coming months, as we've seen that already play out. Meta continuing to get hit. Absolutely crazy. 605.25 as that one continues to go down. Avalon says that this time I've become a Nebius millionaire. Congratulations. I mean, that's the cool thing about these retail-oriented names. A lot of people say it's risky to go all in one stock, but quite frankly, diversification is not really the path objectively to massive outperformance. You've got to pick your horses and let them ride. And I would imagine Nebius has made a lot of people some money, if not millionaires, just like a lot of other names have done over the previous years. These are the opportunities, right? These are the reasons for why we invest. AppLovin 4%. There you go. That is going up. The Googs is, I don't even know if you can call this a dip. It's up 500 billion in market cap over the past week. So down 0.64% to me is not a dip. Apple is a little bit more of a dip, 283 to 276. That one's down. But I don't think anyone can be too upset about that. Any thoughts on space? I think the space trade is not exciting until SpaceX really pumps up the market with their IPO. And I think you're seeing that right now with Lunar, SpaceX, Rocket Lab. I mean, again, Rocket Lab gave some great dip opportunities below 70 and even below 60 during March. It's just, the goal is for this thing to get to 100. That's kind of, I think, the main target that people have, but you're going to need a very strong level of FOMO, essentially, on the SpaceX IPO for people to play it as a proxy, whether it's ASTS, Lunar, Rocket Lab, Planet Labs, etc. Now, a lot of those stocks are also up a lot for the year, but the ones that are down, are a bit disappointing to people because, again, it's not space. It's not fintech. It's not financials. Financials are actually down 5% for the year, XLF, which is another reason I forgot to mention this morning. Part of the reason I think people are bearish is because usually in a bull market, the financials actually participate. There's not been a single bull market where financials don't go up because they're financials. They're a super important part of the economy. It's a little weird that this entire rally has been driven only by tech and selective tech, not even big tech, and then semiconductors, and pretty much nothing else. which, one might say it's not that weird because that's where all the earnings growth is. That's where all the CapEx is going. That's the bull case. The bear case is, well, wait a second. Can this really be sustainable long-term without the other big companies participating? So it's not the Grabs. It's not the Shopifys. It's not the Hoods. It's not the SoFis. It's not the Rocket Labs. It's the Microns, the SanDisks, the Oracles, the Nebiuses, the AAOIs. Like that. It's a very obvious rotation into the companies that benefit from CapEx. I think that's like where the market is playing right now. The fact that Zoom is up 3% because Anthropic is raising $50 billion and putting their valuation at $900 billion. And the only reason Zoom is up is because they have a $5 billion stake in Anthropic, goes to show you where this money is rotating to. Where's Ethereum today? Are we down? We are down about 2%. BTC again, also just below 79,000. AMD keeps dumping. It is indeed dumping today. I would say 4% is a dump, but once again, it's up a lot. I hate saying it, but like I feel like in this market environment, you have to like remind people like this thing was at 270 3 weeks ago. It's at 348, which is down from 365, but it's up a lot. Micron up 8%. I don't think there's any massive memory headline today. I mean, I know SK Hynix popped. Maybe that's just helping all the other memory stocks catch a bit. EWI, that's up 3.4%. That's South Korea. Nebius almost 173, but I think that's what's helping Micron. Nebius, did hit 173. Now, there it is, right back, 173.20 on Nebius. It's pretty incredible, dude. Pretty incredible, the level of momentum on some of these names. Here's my other question for people. How many people now are saying, screw it, if I'm not heavy in the semis, I'm going heavier? Or if I'm already heavy in the semis, I'm going heavier? I'm curious. How many people are saying, all right, I might have missed Micron, Intel, SanDisk, but I still believe there's upside and I'm buying them at these levels. Or I missed Nebius, but I'm buying it at 173. Or I missed Qualcomm and this 5% dip, when it was at 180, now it's at 168. That's my opportunity. I missed it at 130. I am curious how many people have the stomach to buy these charts and not buy Meta and Microsoft right here, which honestly might be the better decision in the short term. Like Micron probably is going up when Meta's going down, but how many people are willing to do that, I think, is a deep question. No. Some people saying, yes, I double down. I'm trimming more of my semis than not. Kyle said, I just sold another cash grip put on Micron. Kyle, you have a lot of Micron. I think you have a lot of Micron. Do a poll for this? Okay, this is probably a good poll question. Because look, for me, it's tough, dude. It is tough. There's a psychological element that makes it tough to buy a Micron at 580. And then there's also the element of here's the way I think of it. If Micron goes down from here, which it doesn't have to, but let's say it does, I have no one to blame but myself. I cannot blame anybody if a Micron goes down from here, because any, rational investor looks at this chart and says, look, the chart could keep going up, but if you buy it at that little tippy top right there, which might not be the tippy top, but if it ends up being at least the short-term tippy top, you and you alone are the only person playing. This is not the S&P 500 that just goes up in a straight line over 1,000 years, right? This is an individual stock that has individual dynamics. You can't just say, oh, it'll just keep going up. You have to actually believe in the thesis. And if you're wrong, then, you're going to be bag holding it. So I think it's just psychologically a little tough to lean into that momentum. But then again, the bull case is if this bull market continues across semis and we are undersupplied when it comes to memory, then why wouldn't there be a meaningful thesis to buy it, assuming, that boom bust cycle is real, but that cycle might not happen for another couple of years, which means there's alpha. I think that is the question. Okay, so the poll is, are you doubling down on semis? AKA, if you don't have semis, are you doubling down by just getting a lot more? And if you already have it, are you increasing your exposure? Or are you a net trimmer of these semiconductor names? NVIDIA right there, 199.08. 199.08. Dude, you've been saying that for months. Just buy it. Look, I love you guys, but I also do not want to take the risk sometimes with buying a parabolic name, because if that parabolic name goes down, at the end of the day, it's my money that's at risk at $584 a share versus people who bought this name at $200, $300. You know, that it's a very hard thing to grapple with. And again, this is why I asked how many people are going to buy a chart that's up. I mean, how many people are buying SanDisk up 400%? I mean, theoretically, if you believe in that thesis, then you sell everything and you go all in on these names because this is where all the alpha is. But I just don't know how many people have the stomach to do that. What if you hit it with a stop loss? Yeah, I mean, obviously, but then it's a trading position. It's not really an investment. I'm not talking about trading. I mean, I might swing a couple shares for the hell of it because why not? But that's not the question. The question is, are you buying Micron with a thesis that if it goes down to 500, I'm buying the dip? Like whenever I think of an investment, I think of, okay, I'm buying a SanDisk at 1240, and if it goes down to 1,000, that's a great opportunity, right? As an investor, I should be happy if I buy something and it goes down because I want to buy the dip. And so I think that is a broader question here. The reason I bought IREN on the dip at 42 was because I thought Nebius was massively outperforming. IREN was getting too much hate. IREN, wow, 10% up right here. And so I bought that dip. Now, Micron probably should have bought it at 320. But, you know, there were other things that I bought at the time as well. And everything basically went up from then. So that now you have to reevaluate everything compared to everything else in this new bull market that we're in and say, okay, is it a good deal at 586 at these levels? And I don't know. And I think 65% of you agree as you're saying, no, you're not doubling down on the semis. I bought Oracle at 135. Why? Because it felt, or 137 to be exact, Oracle 180, because it felt stupid that this stock was very important in the data center ecosystem, that you could call it the ultimate neocloud with $500 billion in backlog on RPO, but it was down with software for no reason. So, you know, some of these things made sense on the dip. Now at 180, I don't know if Oracle's the best buy. Right? Like maybe it is, but if it's not, and if it goes back down to 170, even though it's up from 130, you know, who do you blame if you bought it at 180? CoreWeave right there, 129. Is CoreWeave a buy at 129 here? Right? Up from 67. Maybe in 4 years it is, but is this the best entry point? I guess is the question, to sell your loser like a Novo this year and say, screw it, I'm going into CoreWeave. Or sell your Microsoft or Meta that's been an absolute loser, both of those this year, and say, screw it, I'm going into Nebius at 175. Like, that's my question. How much of the market is really doing that? And maybe it's a lot more than we think. It feels like gold and silver on January 29th. Yeah, I mean, look, the chart on semis looks very similar to the chart on gold, and we talked about that last week with a comparison of that. Silver down 2 today, gold down 1.4. You know, there's a lot of euphoria when gold and silver was pumping, and then as soon as it crashed, everyone was like, oh yeah, it's not sustainable for it to go up like that. Now, the difference between gold and silver, those are macro assets, and a SanDisk has actual earnings. A Micron has actual earnings, but you can make a reasonable case Micron's worth $1,000 if you put a reasonable PE on it and not a 7 times forward. But again, how many people have the stomach to buy it when it's already gone massively parabolic? Or even, you know, raise your cost basis on it if you bought it at these lower levels. Adobe goes red, Fastly's red, Apple 276.50. That is also potentially red. Zandu Leaps have a 99 delta. Is this thing still down 60%? 63%. As that one continues to be down. Nebius, are we going for 20% today? Nebius is 12%. Is there a 2x Nebius that's out there? Is there a 2x Nebius? We have to see. I ran 10% up. SanDisk 5, Q675, that one trying to make an all-time high, and then AppLovin 477. Nokia, someone just bought 2 million of $18 call strikes for September 18th. This one again continues to get more of a bid. NEBX, that's the 2x levered one. How much does this have AUM? How many people are 2x levered on this? SOXL again continues to reach new highs in terms of the leverage there. NEBX is about $200 million in AUM, which, you know, Nebius is not the biggest name in the world, so the fact that it's attracted that much capital is quite impressive. I ran 50, SanDisk up 5.5. Amit, did you say you never trade? No, I never said that. When did I say I never trade? Dude, I do trades all the time. I mean, it's not like the biggest part of my investing style, but yeah, trades are trades. Like there's plenty of trades I've done in my life. I'm just not, not every decision I make is rooted in a trade. And so, like, again, if I end up buying a Micron, to me, that's going to be a trade. Like even Oracle, to me, is a trade. Now, maybe it might become an investment because, I have an attractive cost basis, margin of safety. I'm starting to believe more in their vision. Well, buying at 137 was not meant to, be some long-term investment. It's just now I'm like, well, it's probably not going back to 137, so there's not that big of a reason to sell. But like, okay, here's another question. If you're buying Micron today at 587, would that be a trade or investment for you? Because here's something that, Jose and me were talking over the weekend. Jose, he put out a video he got a lot of shit for, saying, I love Micron, but I can't buy it. So a lot of shit in the comments. But one of the things he mentioned to me is like, Micron's $400 billion away from being a $1 trillion company. If it became a $1 trillion company, how many people think it will stay as a $1 trillion? Because you're buying this for the upside, right? It's at 660 billion. So anyone who's new buying it today, like myself, for example, if I were to buy it today, I'm assuming this thing at least is going to 800 billion, 750 billion, minimum 700 billion. Otherwise, why the hell would you be buying it here? Which then begs the question, over the next few years, can Micron sustain a $1 trillion valuation? Can Intel sustain a $1 trillion valuation? Intel is trading at 60 times forward earnings, not current, but forward. But it's at $500 billion market cap. If this thing goes to $1 trillion, will it sustain $1 trillion? I think the reason people are willing to buy NVIDIA at $5 trillion is because they can imagine NVIDIA getting up to that $10, $20 trillion valuation, because what they built is not as easily commoditized as some of the other players in the stack. Obviously, the bulls push back and say that whatever is commoditized isn't as commoditized, and that's what creates the valuation discrepancy. Nebius 175. 175, as that's not stopping. US gas prices 446. We looked at that last night, highest level since July 22. Again, I think that's also scaring off the bond yields. Roblox, by the way, up 5% after that was down 25%. What's pushing Nebius? I don't know, to be honest. But it's not just Nebius. It's all the neo clouds. I mean, yes, there is a Microsoft headline with Nebius over the weekend, but it's not like a new deal or anything. CoreWeave also, though, 9% as that continues to go green. Micron can hold $1 trillion for at least more than 5 years. If that is the case, then it's a good buy. It's probably a better buy than the Max 7s here, as NVIDIA goes red. As we talk about $1 trillion companies, the biggest one can barely hold on to 200. But again, part of the reason why Costco gets a higher premium than NVIDIA on its PE, we've talked about this so many times, but there's predictable cash flows in Costco. There's theoretically unpredictable cash flows in NVIDIA for whatever reason. Whatever bear case you want to put up on it, there could be a bear case that's out there. Whereas, people are going to be buying stuff from Costco for a long time. If even a whiff of that sentiment enters into the supply chain names that are part of this AI ecosystem, that is where things get, potentially a little bit more ugly. The Q's right there, 675. Shopify also going down. Oh, that's the other thing. Oh, that's the other big news. Yes, that's correct. Thank you, Seb, for that. OpenAI is now using ClickHouse. I forgot about that. I did see that headline over the weekend. They've transitioned from one of their other providers to ClickHouse, and Nebius has a 28% stake in that, which is already worth, what is it, like $7-8 billion bucks? So you could kind of subtract that from the market cap. You get a more relevant enterprise value. That along with that Microsoft prepaid news is probably the reason why you're getting a move right here on Nebius. IONQ, is that pumping? IONQ 4750. 67% of you guys say no, you are not doubling down on semis. See, it's a really weird thing or situation to be in if you're not super, super levered in semis already. And I think, people can relate with this. If your names this year, let's just throw a SoFi in there, is not doing what it needs to do, and you don't see the upside in SoFi, even though you love or believe in the company, do you get the hell out of it and replace SoFi with any of the names that have not really worked this year because they're in the wrong sector, wrong theme, the market's just not feeling them? And then do you ape in to a Micron or a Nebius at these levels, even if they dip and you say, you know what, I'd rather hold on to a Micron at 589, let it dip to 530 and buy that dip versus be stuck in SoFi because I know I'm in the right sector? Or do you tell yourself this is stupid, that this stock has gone up so much, I can't justify buying it right here. Maybe it'll keep going up, but eventually the opportunity cost is not worth being stuck in a name that hasn't done anything. I think that's what a lot of people are grappling with right now. Amazon 271, ServiceNow 92.30. No, because the fintech rotation will be back. See, but I think a lot of people are questioning. I mean, the reason the semis are getting this massive bid is because I think a lot of people are asking themselves if that fintech rotation actually will be back. And if it's not going to be back soon enough, is it better to just buy the stuff that's working? Wow, Meta, dump 603, Palantir as well. Touched 149, now down to 146. Your software names, once again, getting some red candles here. As these are getting hit. You can always buy back. Yeah, but the fear is, like the sort of typical retail investor fear is, I'm long SoFi, I'm down 20% on the year. I sell my SoFi at 1650. I buy Micron at 600. And then SoFi goes to 19. Micron goes to 500. And yeah, I can switch and buy back. But now I'm just like tossing and turning. And I'm literally buying low, selling high. Or sorry, buying high, selling low just to be able to get into a position that I rotated out of because I had FOMO. Like, you know, that's the fear for everyone who's stuck in a loser trying to transition for a winner. If the winner stops winning for a certain amount of time, simply because, who knows, the chart has just gone too parabolic. 51.13 on IREN. As that one continues to make moves, Salesforce still up about 1.3. The New York Times did report that Alphabet TPUs can't be used in some classified contexts. I don't think that was massive news. I also think if Google's down for that reason, it's kind of dumb, because that's not necessarily a problem with Google. That's just them making sure their TPUs can be ready for classified environments. But yeah, that was a headline this morning, 381.99. It was overall a productive meeting with Alphabet and the White House. And I think this is just like a function of that meeting. At least I didn't interpret that as being bearish. Intel just appointed one of the heads of Qualcomm to be the client and AI group CTO, Alex Katosian, EVP and GM of client computing and physical AI. So Intel taking some folks from Qualcomm and getting them into the company. The 10-year, is this still bumping up? It is indeed 4.442. You've got Blackberries. That's still making its move. That was up a lot more. Still up on the day, but it's down. Poet 768. Again, one of the only photonics names that hasn't done anything all year. The Goldman report, I think, over the weekend is pumping that. That's up 5%. And then your memory names just going absolutely crazy. Micron at 592. Where is Seagate and Western? Seagate's at 742. And Western, that was down last week, that one has flipped green, 453. As that one's green. Carvana is down. They actually had a decent earnings. This thing has been shorted pretty much all year. Popped to 440 last week, April 29th. Now back down to 373. Mid, have you checked on Steve? He might be having a stroke with the Meta movement. I don't think it's just Steve, dude. I mean, how many people are long Meta? Put it in the chat. I think a lot of people here. I mean, this was the #1 call everyone wanted to see on the big tech earnings day. Obviously was a disappointment. The call was a disappointment, and the earnings price action was a disappointment. I don't think the earnings itself was a disappointment. I thought the earnings were fantastic, but Zucks didn't sound like he wanted to be there at all. But it sucks, right? Like it really sucks to see a high quality company like this that probably should be a $900 to $1,000 stock. If you look at basic multiples on the types of growth they're putting up, not catch a single bid, because potentially the supply chain names inside of the AI stack are just more relevant, are more important, even if their margins, their profits, their growth is not the same as Meta. DRAM up 7% right there. I also think people are crying too much about Meta now. Now everyone wants to scream about the bear case. People are like, oh, no one uses Facebook. It's like, all right, come on. Like, you sound like the people that are saying memory is cyclical, which maybe memory will be cyclical, but obviously that narrative can't really be used right now as a bear case on the price action, because the price action has shown that memory is not cyclical. The price act or the DAUs of Facebook has shown that people use Facebook. I don't use it anymore. You might not use it anymore, but 3.8 billion people every day use that platform. So it's like people are coming out with just weird bear cases now around Facebook or Meta in general. It's like, did we forget they just grew 33%? Like on a $2 trillion base, that is not easy to do at scale. And they only increased CapEx by 10 billion. It's not like it was a massive increase but they don't have a cloud business. They don't sell external compute. So the street wasn't happy about it. NVIDIA continues to go red. Continues to get hit and goes red. It's fake growth because they're bots. I mean, look, every time someone says that, you have to look at the revenue growth. The advertisers are still paying. Now, if it's all fake, the bot argument doesn't make that much sense to me, because the advertisers won't pay unless they get an ROI. If it's all bots viewing the ads, no one's going to click on the ads to buy stuff, which means the advertisers will stop paying. So even if you say there are bots, which I'm sure a certain percentage of it is on any platform, if the advertising demand is still there because advertisers are seeing the ROI, then it's real people that are ultimately buying these products, unless the bots are buying products, which I don't think is the case, because someone has to pay for that. And I doubt Facebook's subsidizing bots to, buy stuff from their ads. So the revenue growth is still there, and it's there at a level that, we haven't really seen on a company of this scale, which pushes back against that bear case. Roku, that's also up 2% as well. Yeah, WhatsApp. I mean, look, we don't have to go through the Meta bull case again, but the bull case is there. I just think, because the price action is down, people want to say Meta's dead. Same thing with Microsoft. But once again, buying these names when a Micron's going up 4% every day, it is very tough psychologically, I think, for people to navigate that. Especially if your name is putting up good earnings and it's just not getting any love. Nebius down to 172 from 176. What's your thoughts on Rigetti computing? Overall, the quantum space has always been confusing to me. I do think there was a bull case for it. Again, it's hard for me to be super excited about that bull case until I think we see something materialize meaningfully. But Rigetti, at least what I've heard, is like not the exciting name here. The exciting names are D-Wave, IONQ, and then, last week it was Xandu. I don't know if this dilution affects people's bull case on it, but D-Wave and IONQ are the ones that people really care about. Even the Rigetti CEO has come out and said, don't expect any real commercial progress from us for the next 10 years. Like, he's point blank said it. The IONQ CEO is a little bit more optimistic about killing NVIDIA GPUs by 2027, but that seems the one that gets more of a bid. SanDisk up 7%. LWLG, Lightwave Logic, another photonics play, that's up 2.5. Where is Amkor today? Amkor basically flat, but slightly green. Tanner says, I'm yelling at my phone to roll these Nebius covered calls. Yeah, I think Tanner has them at 160. I think a lot of people have them at around 160, 165. Yeah, this name has just been incredible. 11.5% up on the day. IBM, Google, yep, those are also quantum plays. That's hard to ignore. Benny says, if someone has knowledge, conviction, and memories in semis, they should own them and invest routinely. If someone doesn't, they should not own semis and own something else. Yeah, and look, it's really important to remember price action drives a lot of sentiment. When Micron fell to 300, the amount of people that were saying it's over, it's a scam, the memory's done, yada, yada. Now, if you weren't one of those people and you were buying the dip, kudos, right? But that sentiment was there. And I don't think the narrative has flipped that much, because nothing has really happened in the past 45 days for Micron. There hasn't been some massive new update or anything. It's just the stock went up. And now the sentiment is now memory can never fail, because memory is the greatest investment story in the current state of the markets. If it tanks on earnings for whatever reason and the earnings are amazing, the sentiment might end up flipping again. So I do think it's important to understand how much sentiment is driven from this price action. And if Micron was still stuck at 400, I wonder how many people would still be so excited about it. But it's not, right? Which is why I think more and more people continue to be on the side that it can continue to work. ServiceNow, same thing. Sentiment, when this thing was pushing 120, software wasn't dead, fell to 85 on earnings, software is back to being dead. Does this end up reversing that narrative trend if the stock starts going up a little bit? 92.82, as that's up 1.8%. What do you think about what Tom Lee said? So Tom Lee over the weekend reiterated his thesis that we will fall 20% from 7,300. The logic behind why he said it is that in 10 of the last 13 Fed chairs that were appointed, Warsh will be appointed in the next 5 weeks. 10 out of 13 times the market fell about 12% on average. So his argument is it's more of a rule, not the exception, that when we have a new Fed chair, we will see a collapse. Now, he concluded by saying, don't time the market, even if you're tempted to. We will go down, but we will rally to what he says will be the best rally, one of the best rallies we've seen in our lifetimes, back to 7,700 by the end of the year. But this will be a Fed-driven rally, not like in Iran or oil or crazy inflation-driven downward move. It'll be because of the Fed. So he's basically using historical precedent to say this will happen again, which, I mean, who knows, right? 10 out of 13 times, that is his logic right here. So, there's a 77% chance that maybe that repeats itself. But if it doesn't, what if it's just a vicious bull market to the upside? And, the market doesn't care about Kevin Warsh, or they don't care about testing Kevin Warsh. Now, the more oil continues to be up, it makes it harder to ignore that we've got some underlying issues. Oil at 102 right now. But maybe that's how it plays out. eBay right there at 108.83. As that is also green on the day. Our grab earnings in the afternoon. Yes, they will be late at night. They will not be right after the bell. So it's important to remember that. Look, in terms of their numbers, I'm expecting an increase on EBITDA growth and revenue guide. The big issue with Indonesia increasing that regulation on ride-sharing apps, I think it's not as big of a deal as people think. The reason for that is because A, you can just charge a service fare, and that service fare tends to mitigate the amount of pain. B, the other competitors in the region don't have the types of margins Grab has. I mean, they're literally burning money every month. So those companies, I mean, if that hurts Grab, those companies go out of business. Like, there's just no way, unless they dilute shareholders, they're going to be able to keep up with the pace, which might end up creating more regional consolidation, which theoretically could be bullish for Grab. So I think they will address that on the call. I think we'll see an increase of adjusted EBITDA. They're going to put up about $930 million in revenue. And then it's just a question of, does the market care about them? Just like these software names, just like these space names, does the market care? Or is the market going to say, look, the earnings are cool, but Micron's growing EPS at 600%. We don't really care about anything else other than these names that are growing. And, that might be the problem with any company that reports earnings that the market's not excited about. Micron, 590, up 8%. Yeah, exact same thing happened with Zeta. Same thing happened with ServiceNow. I hope this doesn't happen with Palantir. Now, again, I think Palantir is in a league of its own, and they constantly beat on the numbers. And they're going to have to really do it again, because this software stench is all over these companies. No matter how good the numbers they put up, they're just not able to get off of it. Palantir is going to have to once again be like, hey, if you're looking for growth, we are the AI company that can deliver growth. But they're going to have to do that. And these companies that are not growing 30, 40, 50, 60, 70%, and they're not in the right theme, they're just getting dumped. I mean, SoFi grew 40% and got dumped. So it's just one of those things where it's like, man, what does the market want? And right now you're seeing with the price action what the market wants. By the way, Citizens reiterated Google to 515. So Google getting one of its highest price targets on the street today. They see AI monetization accelerating across search and cloud, with TPU commercialization unlocking new revenue streams and margin upside. That's another reason I don't think Meta's catching a bid. Google has a chips business with TPUs, and Amazon has a massive chip business with Trainium. Meta has nothing outside of advertising. Like, that's literally 96.3% of their revenue. And I feel like if you don't have cloud, if you don't have chips, it's just ads, which should deserve a higher premium because of the growth they're putting up. But it's literally just ads. The market looks at it and says, hey, we can't be super excited about it. 720 S&P going green as well. Meta does have, they've been working on robots for a while. They acquired a robot company over the weekend, but I don't know if those robot companies are going to manifest in any meaningful way anytime soon. Meta growing ads is enough, though. I'm with you. I think it's more than enough. But like, it's just like, I think SoFi growing 40% is more than enough too for this thing to not be less than $20. But it doesn't matter what I think or what you think. It matters what the market thinks. The market is like, nope, we do not care. We want exceptional growth, and we want a diverse revenue stream to lead to that growth. AXTI and AAOI going red on the day. Tesla going green. And until we get that, we're not going up. APLD, that is up 1.23. Bitcoin also just below 79. I thought Meta was building a data center. People get confused on this. When Zucks announced Meta Compute in January, he was talking about for Meta's internal operations, not to sell it to other people. So yeah, Zucks was never talking about external compute that we would be selling like a cloud, which, I mean, if they did that, I think the stock would be up a lot. But he wants all the compute to get all the researchers to do all the experiments they can so that they can create super intelligence. And, really the thesis is, can they create super intelligence for billions of people? And I don't know if Meta's going to be able to do that. I think their ads will keep growing, but I don't know if you and me are going to want to engage with Meta's super intelligence AI versus Siri or ChatGPT or Gemini. And I think that's, what the street is doubting as well. AMD getting a pretty ugly hit right here as well on the day, almost 5% down. Why is UPS down 9%? Did they have earnings? These guys have earnings today. Let's check. UPS down 9. That actually is a bit ugly. Amazon did talk about verticalizing more of their stack. Oh, yeah. This was the reason. Amazon introduced Amazon Supply Chain Services, Amazon's logistical network, now open to every business. Today, Amazon is launching ASCS, Amazon Supply Chain Services, opening its freight, distribution, fulfillment, and parcel shipping capabilities to businesses of all types and sizes. Where's FedEx? FedEx is also down 7%. Yeah, I mean, once again, how do you bet against Amazon? They are just literally going after every single vertical on the planet. And Amazon has not bought back a single share of stock in the past 10 years. Apple has bought almost $800 billion worth of. I mean, Amazon's just like, no, we're going to reinvest it. We're going to lose money probably on our shipping business, but we're going to put FedEx and UPS in a really tough position, take market share, and just keep growing. And maybe that thesis, continues to fully play out. Circle still pumping with BTC, even if it's not at 80,000, just the sniff of Bitcoin getting back up there, I think, is getting a lot of these stocks to be more excited. They're basically leveraging their data center to enter new segments. Yeah. And they've done this for a long time, right? They've done this in so many different businesses since 2006, ever since they really started using AWS to subsidize even the e-com business, which they still do. The other big thing about Amazon, people forgot, 13.7% operating margins. It was at 7% a year and a half ago. So they've almost doubled operating margins. That thing gets up to 20%, and the CapEx slows down, which in probably 4 or 5 years, the CapEx slows down. That's free cash flow going right back down to shareholders, which probably gets the multiple to re-rate. Reddit 170, down a little bit from the top at 174. What do you think of Joby as a moonshot? Joby and Archer are definitely moonshots. Joby, I think, has had a bit more progress than Archer from what I've seen. I'd consider them startups that are public, but yes, they, in my opinion, are definitely moonshots. TSM, is that making a move today? 403. This thing did get to 417. Still a $2 trillion company, 2.1. Dom says I bought some UPS. I should probably exercise my stock options in UPS, but maybe we'll wait till the stock goes down a bit more. Because I do have a lot of those from my time at the company. BMNR, that one, they bought more ETH today. I think 100,000 ETH. They bought more. That one up a little bit. Do you think ServiceNow will have its moment? Yes, but once again, Oh, there you go, 94. Making a move here. Once again, the question is, when does the tune on software switch? I absolutely think ServiceNow does not deserve to be trading at these levels. And when it got to 80, like, did the earnings call go the best? No, but it's also like, look, the company's growing 22%, $3 billion base. Like, not easy to grow 70% when you're doing $3 billion a quarter, but still a pretty significant amount of revenue. And Bill McDermott, he's said the same thing over and over again. Agents will be incorporated with ServiceNow's platform, not commoditize their platform. Nothing in the numbers is showing that they're commoditized. It's literally a narrative that the market has. Once that narrative dissipates, maybe this thing gets re-rated. Maybe it gets meaningfully re-rated. Zoom at 107. Rubrik, they had some news over the weekend. They got an upgrade. Rubrik up 5. Yeah, all of software is getting a pump right here, which is good. IGV almost 90. Let's see if that can get back up there. Oh, yeah, there is an event in Vegas with Jensen, right? That's with ServiceNow today. So we'll probably get some clips from Jensen. And, oh, that might be a reason it's pumping. Everyone knows Jensen's going to get on that stage and tell everybody they're stupid for selling the stock. Maybe that's why. By the way, for those that are asking, I do not actually have restricted stock options on UPS. That's a joke because people say I look like a UPS driver when I wear my brown hoodie. So I do not. I've never gotten RSUs from a company because I've never worked at a company. I feel like that's such a cool thing. Restricted stock options. That stock pops, you exercise them, boom. Got all these gains, got all these taxes you got to pay too, but still, got all those gains. It's funny though, because some people that work at their companies, they don't like their stock. Like, I have a cousin who works at a tech company. She's like, dude, every time it vests, I sell that shit and I'm out. I don't care. I don't believe in this shit, not one bit. I mean, I get a paycheck, but I'm not trusting this over so many other names that are out there. Melly, is that up? A little bit. Flat. Sold my RSUs and put it in Rocket Lab at $4. Wow. Yeah, see, Laura? What a hell of a move. I mean, sometimes you got to re-rate. Iranian foreign minister, the Strait of Hormuz will not return to its previous state and there are no negotiations in the nuclear field. Okay. Once again, I don't think these headlines matter anymore. At this point, it's negotiation or bust. And every time you think there's a bust, the market doesn't even care, which is what we're seeing with the price action. AMD still down 4, ASTS down 1, Qualcomm down 4. S&P 721. Sold the 105 Rocket Lab covered call expiring Friday. Palantir 200 covered call. Yeah, I think 105 and 200 on Palantir will be safe by this Friday. Those are pretty far out of the money. Look at Salesforce trying to get up to 190. When was the last time we were at 190? We got there a week ago, and then before that, it was early April. So basically getting back to where Salesforce was after a month, which is good to see. Oracle up 6, following the NeoClouds. Nebia's topped out so far at 176, now down at 173. As that continues to make move. What do you think about Duolingo before earnings? All right, what do you guys think? It seems like most people are bearish buying Micron at these levels. Most people are bearish based on the poll that I did buying a SanDisk or a Broadcom at these levels because people are saying they are not doubling down on semis here. I mean, would you take a flyer on Duolingo down 50% on the year? It's got to be down more than that, right? Duolingo for the year. I know Joseph Carlson said that I think he bought more on Friday. He continues to get. I actually don't think the buy that he did on Friday at like the low hundreds. I mean, if they crush the quarter, it's probably not going to 500 anytime soon. But could this thing pop up to like 130, 140 just on better guidance? especially if software is back, maybe. Or is it plagued by this software is not only software is dead narrative, but this AI is commoditizing language learning narrative which I think is a real issue, dude. Like it is a problem. No matter how much they explain to chess and music and all that, like if you just learn stuff through ChatGPT, yes, there's a moat to Duolingo's proprietary data and network effects, but that broader TAM, I mean, how big is it if people just do stuff themselves without needing a platform to commercialize it? Which, again, it's hard to learn a language by yourself, and the platform definitely helps get there, which is what I think is the moat. But how much does the market perceive that is growing? And also their MAUs have dropped off for 2 quarters, right? So that's not the best thing for Duolingo as well. Do you own Qualcomm? No, I do not own Qualcomm. ServiceNow trying to push 95. Trying to push 95 here. BTC little pump. What about HIMS? This whole peptide revolution. Still trying to get people to be excited. Grab reports on May 8th. They do not. They report today. A lot of times, again, do not trust your brokerage to give you the earnings date. Usually it's false. Just go to the website. Literally the easiest way to go to the website is type in the name of the website and then IR. The first result on Google will be their earnings or their investor relations page. And then immediately you'll see the PR about when they're like forced by the SEC to announce exactly when they are doing the earnings publicly. So the investor page has the best one. Intel down on the day, but it will be today. Wow, NVIDIA losing 198. All right, so what are people thinking about NVIDIA? Why do people think NVIDIA is getting hit the way that it's getting hit? Because my thesis this morning was maybe that Cerebras IPO kind of scaring the market. Also, some bigger players selling out of it and transitioning into the smaller names. Peter Thiel sold of his NVIDIA a while ago. Druckenmiller's out of a lot of it. Again, that's old news, but it's starting to pop up more. Weak hands. Low beta to high beta. And that's actually a good point. Low beta to high beta. Because, Micron's way more high beta than in NVIDIA, which means there's way more alpha, theoretically, than NVIDIA. There's also way more risk compared to NVIDIA. But still, that may be the trade. Software really making the move, dude. Nice to see on a wow, ServiceNow 80 to 95. Congrats if you bought the dip low on this. It was at freaking 84.95 on April 24th, just 10 days ago. 95 right here. That's a really good backdrop for Palantir today. If they crush numbers and software is not being perceived in a bad way, then Palantir is one of the only software names that really grows. That should be really good for them today. I'm still down 45% on service, but that's the opportunity, right? Like this thing was at 190. Most people bought it, I think, in the 120s, and they thought that was the dip, or even at 150. It's at 94. Like it's got a lot of room to grow if it actually makes a change. From these, even Shopify down from 150, fell all the way to 107, now back at 128. Rubrik also moving with it. That's in that software ecosystem. Oh, the other reason NVIDIA is down, we didn't talk about this on Friday, but I think Jensen issued this statement over the weekend. Jensen said that their share of revenue in China is now 0. Yeah, Jensen says NVIDIA now has a 0% market share in China and says U.S. export policy has largely already backfired. Now, maybe he's saying this to get both regulatory bodies to be more interested in getting NVIDIA chips out there. But I know we did talk about this because there was the Huawei headline that they sold 750,000 chips and they're expected to do $12.8 billion in revenue. So you've got a brand new IPO for a chip company, which for better or for worse, people say is a massive competitor with NVIDIA, which I don't fully understand the accuracy of that, but nonetheless, that's the perception. And then you've got China taking all of the market share away from NVIDIA and AMD for domestic companies. I think the CCP said we expect 80% of chips to be domestically supplied over the next year. I mean, maybe if there is any pressure on Jensen's ability to beat and raise because they can't include that China revenue in the guidance, and they thought they would get to include China 5 quarters ago and it hasn't happened. Maybe that's part of the reason why it's selling off. David said someone just bought my 195 covered calls on Palantir for 21 cents this week. You gotta love the super low delta OTM plays on earnings weeks for some of these plays. What do people think Palantir could see after earnings? My range is 130 to 165. I'm more biased to 165 if they crush it. But now that it's pumped so much going into the print, because it was at like 138 last week, I think now the downside is maybe 137-ish instead of 130 like it was when it was at 140. Just because if it falls from 147 to 140, that is a pretty ugly move, and then maybe give it a couple bucks away from that. But they would have to mess up earnings, and I just don't think Palantir is going to. I mean, they just like the momentum is all on their side. I don't think they mess it up. If the market doesn't want to give them a premium, that's the market's thing. But I don't think Palantir messes it up. And if they don't, then I think we see a much bigger move. And maybe this is the turning point for this year. As it's down 20% of the year, but it's not down as much as some of the other software names. So it's been not hit as aggressively as the other ones. What do you think about Amcor? I like it. Intel mentioned them. We've been talking about Amcor for a while. Stock Talk, who should be on the show, I believe Thursday. I'm confirming with them. Wasn't able to do Friday, but probably on Thursday, market open. He introduced this to us at $30, and obviously it's made a massive, massive move. And, the re-rating for packaging has also started to happen with the increased guidance on CPUs. Now, again, would I buy it here? I don't know. I even think Stock Talk would question buying it here, but also given his cost basis is much lower, kind of a general rule is to not violate that as heavily here. But it's also your risk reward. Like, do we see Amcor as $120, $130 stock? I don't know. Because that would be a price of sales that is much greater than what it is today. And the thesis was never for the price of sales to be as aggressive as that. It was to go from 1 to 2. It's at 2.5. So the thesis played out. I'm assuming people had an Intel thesis and that played out, and now it keeps running. So, like, again, the bears are saying, all right, enough is enough. Like the Amcors, the Intels, the Microns, they can't keep moving. The bulls are saying, no, everything's been re-rated. Everything's been re-rated. And you just like when 2024, it was like, okay, NVIDIA $3 trillion, that's enough. It's like, nope. The thesis got re-rated and you can't stop it. Rocket Lab finally getting some love right here, back above 80. Maybe that could be happening. Japan's finance minister says that Japan has large supply chains in Asia which are at risk of disruption. The other issue for grab and for a lot of these Asian companies is oil. And I'm very curious to see what management says about their guidance on oil. Japan also feeling it. Zeta back to being green, 1871. Price of oil and the oil supply shock is not good for these smaller companies in Asia, or smaller countries in Asia that get a ton of their oil from Iran, or at least going through the Strait of Hormuz. So obviously not the best thing for Japan, probably why the BOJ continues to intervene and buy up yen. But, I wonder how long they can keep that going. Robinhood getting a little bit of a move, 78. It was at 84 before earnings. I know it's been painful, but nice to see this one at least trying to crack back up to these $80 levels. AMD, that one is still down. By the way, the administration taking full credit for the win on Intel. Here's what Bessent said over the weekend.
And with Intel is our national champion. With semiconductors, the government took a stake several months ago under President Trump's direction. I was in the Oval when he told the CEO of Intel that he would like a 10% stake. The CEO turned it over, and the U.S. government's made between $30 and $40 billion on that, and
Wow.
no one wants to give the president credit for that. And he is working for the American people every day. So not only, Maria, not only do we have more national security, we have a more resilient balance sheet. And with Intel. I
mean, taxpayers are up 30 billion on Intel. Now, the ironic thing is if, the government were to sell that stake, Intel would drop like immediately. Oracle, by the way, nice move to 182, up 6%. I mean, it would drop ferociously because everyone would think, okay, we've lost faith in Intel. Obviously, that would be a lot of selling pressure. Same thing if Jensen sold his Intel. But they're probably not going to do that because why would they? They probably don't want to mess with the narrative and the story, and Intel is putting up growth. So they likely can't sell it, but that doesn't mean that it can't go much higher if they continue to hold. Amit, I put 1 million into Figma in the 16s, over 50,000 shares. Figma's like 18 now, right? No, Figma's wow, Figma's up 9%. Dude, Halabeast, you've done like 3 of these successful full ports into individual stocks. It's like really worked out for you 3 times in a row. Congrats. There you go. Up $4 a share. I don't know why Figma's up 9%. Might just be because of software, but this one seems like something specific to Figma. Did Kathy buy Intel? She did not. She actually sold a couple $100 million of AMD. I guess the Claude design thing, the market doesn't care about anymore as much as they cared about last week. This thing was down 20% last week on that Claude news. There you go, Figma green. What about Adobe? How does Figma get a pump? But Adobe is getting 1%. At least it's up from the 220s. Adobe right here, 254 on the day. Where's Elf? That is at 62. That's up a little bit. Nike, that is also up a little bit as well. Well, no, it's down. And then Palantir at 147. What do you think about earnings today? Palantir, On, and Fang. So Fang is energy, Diamondback Energy. I think they do well because obviously energy has done well. The problem is it's up 40% year to date. So just like Chevron and Exxon that were sell the news, even on good earnings, that could be the same with Fang. On, I think, is going to do well. I mean, they've seen a massive re-rating given the type of demand that has started to interplay between CPUs and photonics. So I think On's going to do well, but On is also, again, I don't know if it's priced for perfection, but it's up 82% this year, right? So it's made a move. And then Palantir is the one that I think is going to crush, but it's also down on the year. So maybe that one has a big one. If I had to guess, I would say On pumps, Palantir pumps, and then Fang probably flat to dumps. But I could see that pumping easily because energy's been well. Spirit Airlines tells bankruptcy court it has no choice but to liquidate remaining operations as per their court filings. I was surprised Trump didn't save it. Like, that's 17,000 jobs. I was really surprised he didn't save it because he really sounded like he wanted to. And it wouldn't have cost them that much money. It would have cost them $500 million, which is not that much for the government, but they let it go under. Ford, April, U.S. SUV sales, 72,000, which is down 16% year over year. Hybrid vehicle sales, 15,000, down 32% year over year. As per Ford. The Spirit ticker was also called SAVE. That is quite ironic. Amazon, trying to get back to its earnings high, went from 277 to 258 the day after earnings. That was the day I took off. I couldn't believe it when I woke up. I was like, wow, did not expect that to just dump right back to 274. Right back. BMNR also making a little bit more of a move as ETH and BTC. Amcor now turns red. NVIDIA continues to be red. Goodness, dude. And that's incredible. The fact that Corey and Nebius are pumping. Okay, here's another question I have for everybody. Does it make sense, like functionally, that the smaller AI derivatives are pumping and that the large ones, you could put the hyperscalers in there, are not? Does it make sense? Because I think the bull case is they're smaller market caps, so yes. The bear argument is, well, they wouldn't have any demand if the big guys didn't subsidize them. So, like, logically, do you just follow the money? Or do you stick with the entities that are creating the demand in the first place for the Amcors and the Intels and the Microns of the world? And I feel like there's an argument for both sides, but obviously the answer right now objectively seems to be you buy the derivative plays over the big ones because that's where the money's going. At least for now. What do you mean by subsidized? Well, I mean, there is no demand for a Nebius unless Meta wants to buy more GPUs and needs data centers, and they give Nebius a $25 billion deal, right? It all goes back to NVIDIA. It all goes back to a Meta, which both are doing horrible this year compared to a Nebius. But a Nebius has got the it's almost like a psychology of large numbers here. That's the defining reason for why this one is outperformed as well. Versus purely just earnings, because obviously Nebius doesn't have actual profits yet, but they do have a lot more growth. NVIDIA 197.86. SMCI, this one was the poster child of derivative AI plays back in 2023, catching a bid. This one now up 4% on the day. It makes sense because NVIDIA can't 2x by the end of the year, but other companies can. Yeah, and I think that's a very coherent point for why these other companies. I mean, people just think Nebius can get to 80 billion before they think NVIDIA can get to 10 trillion, which is, you can't really dispute that. It is way easier, in my opinion, for Nebius to go from 44 to 85 on market cap than an NVIDIA to go from 5 to 10, right? Maybe it's as simple as that. Webull did catch a bid as well. It was at 450 a couple weeks ago. Now it's 731. That one continued to go green. Yeah, that's fair. NVIDIA was in the low 90s last April, so it's still up a lot over the past year. It's just year to date. Obviously, the other ones have done way better. Amazon, can we get 175? Sorry, 275. Okay, it's got a couple bucks to break that earnings pump that we had at 277. As Meta slightly gets a move at 610. When all the big dogs have stalled and the small guys are running, that's usually a sign we don't have much run rate left, just saying. Yeah, and again, that's why I did that article over the weekend, and I also think that's what a lot of people feel on this poll, right? 70-30 on are you doubling down on the semis? I just saw a lot of bear cases over the weekend saying the fact that these bigger names are stuck and the smaller names are running means we're entering a parabolic stage of the melt up. And once again, the counter argument to that is that it doesn't matter, because if the earnings continue, then that parabolic stage can get more parabolic. Now, oil and the 10-year aren't helping, but if the market keeps not caring about that, then maybe the market keeps not caring about that. Take two, that's a 223. Can we look at the stock draft? Yes, let's pull that up. I think I got the lead on Friday. I am continuing the lead. So Matt's at 35.3. I'm at 39.3. So we have Nebius, massive winner, AMD, massive winner, and then Apple, massive winner. We have that massive loser, Duolingo, down 76, but still at 39. Steve's at 23.7. He's up almost 4x on Micron. Tanner's at 10.3. Again, Matt's at 35, and then Chris is at 18. Google and Marvell doing the best for him right now. What do you think about Lumentum? So Lumentum is the other poster child with Coherent for photonics. And those stocks have also gone vertical this year. I think that is probably why Goldman, once again, put out that report. Lumentum's up 1,400% over the past year. It's up 150% year to date. Put out the report on optics and where optic electronic infrastructure is going. Look, I think Lumentum, I don't know if it's a buy at 950 because, again, it's run like crazy. But NVIDIA invested $2 billion in them for a reason. Same thing with Coherent. Now, I don't know if NVIDIA would invest $2 billion at these levels, which, Jensen could really pump up a lot of these stocks if he bought more Intel, or if he put money into Micron, or he bought more Nebius and CoreWeave, which he has a ton of, right? I don't know if he's willing to buy them at these levels, but he did buy them 50% ago. And that's where the alpha was. And so the broader question now is, if the cycle continues, will the alpha continue on those names? Which theoretically it should. But maybe there has to be a retracement before that, before that fully happens. ABCL, is that making a move? Accelerate, do they have earnings today? I think they do. That's up 5.6. This is also going to be one that we need to see if it goes up. NVIDIA still down. We talked about Palantir earnings earlier in the show. Talked about it last night as well. Again, I think they're going to crush it. Yes, I'll be covering Palantir earnings later today, 3:45 with Arnie and Amir. So we'll be looking at all of those different earnings. Okay. A couple of other different macro things. Government of Canada announces a new $1 billion business development program, $500 million additional funding for regional tariff response initiatives. Iranian Revolutionary Guards report no commercial ships or tankers have passed through the Strait of Hormuz recently, calling U.S. official claims unfounded and absolutely false. Okay, do we agree with the U.S. saying 2 ships have passed, or with the Iranians saying 2 ships have not passed at all? Now, if they were lying about actually attacking the ships, then they might be lying about this, but it looks like the UAE is saying, no, our ships actually were attacked. So we still don't know exactly who is telling the truth here. By the way, these were the ETF inflows over the past month of April. IBIT actually came in at number 11. DRAM, look at that, 2.3 billion. That's all memory. It's up in the top 12. VOO was number 1 with 23 billion of inflows, 48 billion for the year. IBIT actually got 2.3 billion, 3.4 billion for the year. So you do have some of that Bitcoin momentum that came back in April. SMH was at 3.4 billion, 5.6 billion for the year. A lot more people excited about memory and maybe more BTC. We're in a global he said, she said. Exactly. Like, we are legit in a global he said, she said. Micron, are we going for 600? Micron, 585. It touched 592. Took a breather there. Again, up $40 on the day. Micron itself. Does DRAM have SK Hynix? Yes, it does. It does indeed. SK Hynix was up 11%. That's also why DRAM is up. Palantir, 147.83. SMCI up 4. Nebius back to 172. Let me do another poll right here, because I think this is also probably relevant. Do you own one of the following? Let's do Micron, SNDK, Western Digital, or Seagate / DRAM, or none. I think last time I did this, it was 70-30. 30% of people had one of these names. 70% had none. And the reason I'm asking this is because, it begs the question, how many people want to take a bigger chance on memory going into the print? Or going into at least more of the earnings prints. If you own at least one of them, that's all that matters, because that means you have exposure to memory. So even if you own multiple of them, the bigger question is if you're in at least one of them. Not through an ETF, not through like the S&P. You have to actually own a dedicated memory ETF. The point is, how many people are levered up on memory is my question. That is my question. We can do photonics next as well. Because again, those seem to be those seem to be the 2 bottlenecks that the market cares about right now. And I don't know if the market's going to care about it 5 months from now, 5 years from now, but right now, at least for the past 5 months, we're in May, 5th month of the year, that's what the market is cared about. Like, neoclouds have done well, but memory has massively outperformed the neoclouds. Just, SanDisk alone up 3,500%. ServiceNow still moving. Software might be back. Software might be back. Wow, 62%. Wow. So 5% of people own SanDisk, 4% own the other place, 29% Micron, 62% say none. So we got a 60-30 split. A 60-40 split, I should say, but really 60-30 because Micron's the majority of it in the context of memory. Amit, if Grab disappoints tonight, do you consider jumping ship? I'm going to take a real hard look at the earnings and see what we've got. I talked about this last week. Again, it's been a loser for the past year and a half, but I think, no one wants to hear this, but stocks are not supposed to go up in a straight vertical line within a year and a half. Like for the previous big names that I've had, that is absolutely not what happened. The problem is when everything else is going up straight in a vertical line, it makes you feel there's a massive opportunity cost. So it goes back to the example I talked about this morning. Do you sell something at 52-week lows to buy something at 52-week highs simply because you can't deal with the opportunity cost anymore? And does that end up becoming the right decision? Maybe it does, whether it's SoFi, Grab, ASTS, all these names that just haven't meaningfully performed. But maybe that's the wrong decision, even if the earnings aren't amazing. So, I want to see the guidance. I want to see functionally what they say that makes me think if I want to reevaluate the thesis. But it's just a slower mover. It's going to be a slower mover compared to a Micron. So I just don't think people should compare those types of names to the names that are moving up. Like, you can't compare them. Like, the growth's not at the level, the margins are not at the level, the geography is not at that level. So we have to get out of those comparisons. But nonetheless, if the comparison is opportunity cost, then there's obviously been an opportunity cost. But I think there's been an opportunity cost across software throughout the entire year. And, now people are calling BS on that, which is why they're buying ServiceNow. Retail has missed a lot of this run. It's in the data. That is correct. I looked at this morning in a couple different articles. And it's logical because, when I asked, I think around April 1st, how many people are buying the dip? This was the day after the ceasefire was announced. So maybe it was April 2nd. I had three options on the poll. 33%, yes, I'm buying. 33%, I'm cautiously buying. 33%, I'm not buying. And 66% of the vote on the chat was I'm not buying or I'm cautiously buying. And the macro data has shown that as well from Goldman, which is that retail really didn't participate heavily in this rally. Now, that was different from 2025. Retail legit, it was like 95.5. Retail bought the dip and the institutions got it wrong, which is why the rally was so explosive last year. This time it was institutions not taking up the bulk of it, but it was a combination of institutions and retail. But it was absolutely not retail said, this war is stupid, I'm buying the dip, just like they said the tariffs were stupid, I'm buying the dip. Like, there was a lot of people. I mean, just scroll through my post back in March and look at the comments underneath every headline of just people saying the world is over, this market is uninvestable, yada, yada, yada. We've had a massive rebound. And so part of that rebound has also led people to be stuck on the sidelines because they couldn't believe that a Micron could go from 300 to 600, irrespective of the Micron thesis, just the broader war narrative being an overhang. It got tough for some people to meaningfully say I want to buy the dip. But literally anything you bought at that time should be up more than not. Bitcoin above 80. Once again, that one making a very, very nice move. 80,450 as that one helping Hood, helping MicroStrategy, helping all of those names. Rambus is my memory play. Is Rambus recovering at all? Rambus back up too. Again, this one also phenomenal earnings, but it was up a lot going into the print. So now it's only up 15% this year when it was up 47%. Which means it just ran too hot into earnings, even though it had a really freaking good earnings. Air Test Systems as well, that's down 6.3% today. Circle also continuing to make a move. That's on. I mean, Circle got to 130 before it collapsed. Wow, 116. Maybe the Clarity Act is that thesis as well. I mean, most people say by end of May. A lot of people said by end of April, but Now, if it's end of May, maybe there's a better chance that we actually end up getting clarity on that Clarity Act. Dude, if Bitcoin comes back to 100, I think people would be a lot more excited about it. But, you know, we have to see if that actually takes place. This picture I thought was kind of pretty and funny over the weekend. I mean, what if Spirit just takes their airplanes and puts GPUs inside of them? And like, literally, it's crazy to think that Spirit could convert the airplane into an AI data center. Probably not realistic, but it would be funny. Yeah, Spirit AI. Like, seriously, if they really transformed the airplanes into AI data centers or AI factories, maybe there'd be a better chance. Yeah, if the shoe company did it, where is that shoe company, by the way? Bird, down 7%. Down 7%. Spirit still completely going bankrupt. That stock. Where is that stock? Is that stock even still trading OTC? That stock, FlyQ. Yeah, it's down 19. Look at that, down 81% of the day. My goodness. My goodness. This one's just getting destroyed here. I feel like it could actually work, right? Yeah, they're still gonna have to pay high fuel costs, but maybe that's more profitable than flights. Would you buy Pouncer before earnings? No, I wouldn't buy Pouncer before earnings. I wouldn't buy Grab before earnings. I feel like every earnings play has been a disaster unless you got lucky, to be honest. I mean, like ServiceNow, it was set to make a massive move after being down 50%, and that thing fell on earnings. Rambus, Celestica, Cadence, they all dropped 20 to 30% on earnings. Cadence, I think, had a easier fall, but the other ones were just collapsed because, you know, the earnings just, they were good, but they weren't good enough. Meta obviously destroyed on earnings. Like, I think earnings plays are literally a gamble in this market. It is really tough to think that I mean, Intel obviously worked out, but again, Intel was up 100% going into the print. So you had to really assume it would work out. Duolingo, is that a buy before? I have no, like, I could see it going up just because it's sold so much, but I could also see it easily taking a breather. Top Fan, thanks for the super chat. Will you be covering OSS earnings this Wednesday? I believe it'll be in the morning. So yes, we're probably not going to listen to the call, but obviously we will cover the numbers. They made a lot of progress. They have a lot of nice prototypes. They already kind of gave preliminary guidance last week. So, you know, if they can keep doing what they're doing, I would imagine OSS will be in a good situation. Reddit 170. Is that one's red. Amid Jason's calendar spread strategy is actually doing numbers for me a lot on earnings. Yeah, but see, the calendar spread that Jason does is a very risk-adjusted way to determine where the volatility will go to the downside or the upside and to make a spread in between. The types of earnings gambles that people are talking about are just buying, you know, 1,000 shares of Reddit before earnings and seeing if it goes up. Or buying, you know, Reddit was at 140, 165 weekly options and having those go to the moon if it goes above 175. Like, those are the types of earnings gambles that people have been doing, and some of them have really been working. A lot of them have just gotten destroyed, like on Microsoft and Meta. But the calendar spread is a much more safer way to navigate those earnings. The NASDAQ, are we dropping a little bit? Qs, a couple red candles, still up on the day. Where is crude? Is crude being rude? 103, we're back up. 103.50. We were almost below 102. Where is Fartcoin? That's a great question. Fartcoin is up 5% today. See, this doesn't make me more comfortable about some of these levels of price action. 5%. There you go. Are you coming Symbiotic? Is that on Wednesday? We will cover every earnings that we get. We'll try to get through all the numbers. But if that is Wednesday, we'll be here. This makes me nervous about AMD tomorrow. Look, if you're nervous too and you have a heavy position in this stuff, you could always do something pretty freaking simple. I feel like people forget to do this sometimes, or they get scared to do this, but it's not that scary. Just buy some freaking puts. Like if you have a massive AMD position and you're afraid that it's run up too much and it's going to fall 10, 15% and you don't want to deal with the fall, I mean, putting 1%, 0.5% of that position into puts to cushion some of the fall is not a crazy idea. And if you lose that money, okay, it's the cost of doing business. It's insurance, right? Like it's the whole point of options in the first place. And if you don't, it is what it is. So I feel like there's not something. Now, again, if you I wouldn't hedge my AMD position because it's not big enough to worry about. But if you are afraid of it, or again, sell some very aggressive covered calls and be okay with losing some of those shares if it ends up getting hit. VG, that is also up 3%. Yeah, or a collar hedge to collect a credit. I mean, there's so many ways to navigate earnings if you have a massive position and you want to protect yourself a little bit more. Or, yeah, trimming. I mean, that's obviously that's more personal around how much the position has grown for you, but it's also not a crazy thing to just, okay, if I have 2,000 shares, I'll sell 200 shares and I'm happy with 1,800 shares instead. I ran right there, up 9.2. But again, I think the reason AMD might end up heading towards 400, and again, Lisa's who's going to have to demolish earnings, but the reason there's a shot is because if Intel is seeing the type of demand they're seeing on CPUs, and I know they're the sort of industry standard in this, I would imagine AMD is also seeing that demand. Now, maybe it doesn't manifest as easily in this quarter, but if the guidance goes up in Q3 and Q2, or basically the fiscal year, I don't see how the street doesn't say, well, this is a lot more than the 35% revenue growth we expected. And, maybe that goes up. Or at least that's enough of a reason for it to go up. But it obviously has made a pretty massive move. AMD really pops on earnings. That is also true. I have not seen an AMD pop on earnings in a while. Like last time it didn't dump, but it definitely didn't pop as much as people expected. Qualcomm, is that still down on the day? Qualcomm still down 5 on the day. GEV, that is also up 1.7. Doge is coming back, baby. 11 cents. This thing was stuck at like 8 cents for the past 2 months. Nice 30% move on Mr. Doge. Dude, if Bitcoin actually comes back, you're just going to see a lot of excitement across all these other risk-on assets. If you were up 150% on AMD and that position is 50% of your portfolio, what would you do? See, it's a hard question because, it's hard to, like if that's like a $20,000 account, I'm not touching it because it's like, all right, I YOLO'd into AMD and now I'm just going to let it play out. If that's a $2 million account, that's a way different question, right? So I think it depends on the account size, but I think you have a hell of a margin of safety. You're up 150%. And you did what, retail has done over the past 4 years, which is pick your horses and then hope your horses are right and let them ride. And that is the way to meaningfully outperform. I feel like that's objectively, this is what Buffett does as well. He allocates heavily into certain companies and hopes that those companies beat the S&P. So I think the rule of thumb here is if you can't sleep at night, you trim some. If you're able to navigate it, then you let the ride continue. And it's also, I feel like SanDisk bulls are in a different situation now. If I'm up 3,000% on SanDisk, I'm out, right? Like I'm taking a decent chunk of profits there, even if I'm up 500%, 600%. But 150 on AMD just feels like there might be more upside if Lisa can crush. Okay, so I have been drinking a lot more water recently, which is very healthy for me. But the reason I'm bringing it up is because for the first time in I think a long time, I have to go use the bathroom. but it's for a good reason. I've been drinking a lot of water. So let's listen to Tom Lee. I'll be back in like 30 seconds.
Certain, but I think the war has also exposed the strength of the U.S. relative global position. You know, earnings estimates have actually gone up as earnings seasons progressed. The U.S. is a leader on AI, and that productivity lift is meaningful. I think it's really one of the drivers for not only GDP, but one of the reasons U.S. companies have been resilient. And I know there's a lot of investors still on the sidelines. So I think the war remains uncertain. And I mean, it certainly looks like it's going to be a longer war, but I do think stocks actually still have some tailwinds actually as we get through May and into July.
You mentioned the earnings estimates going up, undoubtedly the case, although there again, it's been pretty concentrated in the AI theme and in semiconductors and the other CapEx beneficiaries. So therefore, the market is somewhat narrowed out to that very dominant theme. I always keep an eye on the consumer discretionary equal weighted. It's 9% below its highs, right? So that's sort of where some of the economic frictions from the war can bite. So is that okay? Is that a good formula for how this market can continue toward your targets higher?
I mean, I think one of the reasons why it does feel concentrated is the AI story, which is a global productivity story, right? AI is essentially creating productive units that actually either help workers produce more or even replace workers in some countries. It's primarily taking place in just the US and China. And so I'm not surprised in a way that we could see the US companies actually disproportionately benefiting this because it's not really taking place in Europe. So I'd sort of expect that concentration. But as far as like the effects later this year from higher oil, I think that's a negative consequence, and I think it raises questions about what the Fed could do. In fact, of course, we're getting a new Fed chair. That's why I think later this year the markets could actually face a test around that. But for now, I think it's just an earnings tailwind story.
So again, earnings are the story, but he's bearish on this Fed chair. And I don't know, do we believe that historically a Fed chair gets tested, so we have to get tested again? And we have to go down again 15% from here. It's going to feel like hell. Like it's going to be bad. Low 6,000s is not going to be easy. I can't even imagine these stocks that have rallied this much. What happens to S&P's at low 6,000? Everything is getting annihilated, minimum by 20 to 30%, especially on the high beta names. So it's hard for me to see that. Obviously, you can't be naive enough to think that's not going to happen, but if the reason is historically that's what happens when a Fed chair gets introduced, I mean, if that happens again, it would be a hell of a reason. But maybe that ends up being how it plays out. Did you flush and wash your hands? Yes. I flushed and washed my hands. Yes, Mom, I washed my hands. No, I usually never have to pee during the show, but like I really did start drinking a lot more water. Like I'm trying to get more water as a part of like my routine. So I woke up early, drank a lot of water today, and I'm like, well, if you drink a lot of water, you have to wear a diaper. You're not allowed to leave us. I feel like once you get old enough, everyone. It's so crazy how life works, right? When you're a baby, you have to wear a diaper, and then when you get to that age where you're old enough, you also have to wear a diaper. It's a crazy circle of life that plays out. Yeah, we talked about the UAE air defense systems responding to a missile threat. So far, the market's kind of ignoring it. Why does Soundhound keep on? I don't know. This is shorted like crazy. And I guess the short squeeze is continuing to get this to go up. I have seen the rise of a lot of more smaller names that people are constantly throwing out there. And, a lot of people have been messaging me saying, Amit, why don't you cover this? Why don't you cover that? The reason I can't cover every sub $1 billion company that pops up, and I know that there are so many people that have them, is because I am very afraid of this happening and having to deal with it. This right here. Nice $17 to $6 decline on Poet because a very small company did what a very small company does, which is lose a purchase order for whatever reason it is, but they lost the one order that was contributing to the majority of the revenue, and boom, the thing collapses. It is not easy to associate yourself with a lot of these smaller names, especially if you have an audience at the end of it. Like, just call a spade a spade. If there's people that are going to hear about a name because you talk about it and it's super small and it's running up like crazy, but you don't know why the hell it's running up, and you might not be able to have a coherent thesis, but it's running up for the hell of it. You just can't talk about all of them. You just can't do it. Like, you never want to be responsible for that. As much as I hate that Grab hasn't outperformed, my conviction in it remains strong because it's trading at 40% cash, growing adjusted EBITDA 60% year over year. Like, I'm sorry the street doesn't like that. Like, it is what it is. The street likes a lot of other plays more, but I can feel comfortable knowing that that is a name I attach myself to. And if the thesis changes, the thesis changes. If you take the L, you take the L. But at the end of the day, that's not some pump and dump random small cap that said we're working with AI, and then boom, everyone starts talking about it, starts running up like crazy, and then someone is left holding the bag. Even if it outperforms something that you have higher conviction in the short term. Because again, a majority of those just go to zero, or they end up becoming irrelevant after the hype dies. And so, that is the other hard part with he'll become scam it. Yeah, exactly. Like, if you pick a really, really small cap company, which again, Grab's not even a small cap, it's like a $15 billion company. It's just the prices are small because there's a lot of shares outstanding. But if you pick a very, very small cap, I think that one of the only ones I've even talked about meaningfully is OSS, because I think there's a legit thesis there because of the government contracts that they have at 200 million. It seems more obvious than not that if they execute on those contracts, there's alpha there. You've got to have a thesis, and you've got to be able to defend the name. If you can't defend the name, you can't easily say you bought it. I feel like if you buy a name and you don't explicitly say this is a trade, and I don't care if it goes massively up or massively down because I will be out at my certain price target, then if you're buying it as an investment, you have to actually be able to defend it when shit happens to it. I mean, this is what analysts have to do all day, right? And I don't know if I could defend a poet. Now, I think there's a thesis to poet, but it's hard to be super excited about that thesis when the company has been paying YouTubers to promote the stock and when the CFO is violating NDAs. Like, some of that stuff is indefensible, to be honest. I mean, at what level can we say that SanDisk has ran up too much? Well, you already have, I read some bear cases on it over the weekend. You're already, these guys do what? Almost 10 billion in revenue per year. Market cap's at 185 billion. So on a price to sales basis, which I don't think is the best way to evaluate their growth, but people can say, look, it's a bit extended. Obviously the chart is a bit extended, but the forward PE is not that extended. So I don't know. This has been the task with these AI supply chain bottlenecks that's been confusing to the bears all year. I don't know if you can say there's a top to a Micron or a SanDisk when you look at that forward PE, assuming that growth continues and these companies continue to say we are signing these multi-level hyperscaler agreements, that they're extended. Even if the chart feels massively extended. So, yeah, and then there's all these derivative names that are part of the memory stack, but they're also sub-billion-dollar companies, which again, if you haven't done all the research on them, are you willing to defend them when they take a hit or when a piece of news comes out about them? Amazon 274, as that's still green. Are you still on Fastly? Yes. Fastly is a very small speculative position for me. But this one is more, and see, when people said I don't trade, I was like, hold on, Fastly is a trade. This is an obvious trade. Entered at 24.70. It's at 27.70. I think they have earnings coming up. This one is absolutely not something that I'm super, super, super excited about. But I think it got sold off with SaaS for no reason, given they're more of an AI infra play, even though there is a SaaS part of their business. And, target here is 35, back to where it was back in February if the SaaS narrative changes and they deliver good earnings. But that's a trade, right? Like, that's a very obvious trade. Fastly is not something I want to hold for the next 5 years. Rocket Lab is something I want to hold for the next 5 years. But Rocket Lab's underperforming the names that you might not want to hold for the next 5 years because you don't think there's earnings power on those names. But in the next 5 months, there's absolutely way more earnings power than a Rocket Lab, at least in the moment. UKMTO says it has received a report of an incident north of Dubai. Dude, okay, so the UAE definitely thinks something happened with their vessels as they continue to put out more reports. Oh, wow, they're putting Navarro on TV? They haven't had Navarro on TV in a lot. They got him talking about inflation, folks. We haven't heard Navarro in, it feels like, years. All right, let's see how he's justifying inflation.
Like them, one of the biggest problems we have is inflation in beef. And one of the reasons has to do with just the way nature has been for the last decade or more. Drought has been a very big problem. There's not much we up here can do about that. But there are policies, for example, the withholding by the Biden vegans of literally millions of acres of grazing land. And we are swiftly moving that back in to help lower costs.
Okay, Navarro kind of pseudo blaming climate change for the issues with beef. The UAE says we detected 4 cruise missiles coming from Iran towards the state. Wow. We detected 4 missiles from Iran and successfully intercepted 3 over our territorial waters, with the last one falling into the sea. Okay, if the UAE is not lying about this, which they had that warning for all their citizens an hour ago, that means Iran is once again launching proxy attacks on other countries in the Gulf region. UAE defense, we detected 4 cruise missiles coming from Iran and successfully intercepted 3 of them over territorial waters. Crude back to 104. Why are they attacking the UAE today? Like, is this their way to protest the U.S. Escorting those ships through the Strait of Hormuz? Maybe those ships were UAE ships. We still don't know if they were South Korean ships or if they were UAE ships. Maybe this is their way of fighting back. APLD up 4%. Probably, right? That's their like response, because they don't want to shoot at the US, so they're going to do a proxy shot at the UAE. Bitcoin potentially falling below 80. They did leave OPEC. I don't know if that's a reason for why they're doing it, though. I mean, honestly, maybe it might be a reason at this point. But that, along with the other issue, could be happening. S&P, I feel like the market should care about that, right? Like Iran launching a proxy attack again on a neighboring state likely is escalation. S&P goes red. Let's see how much the S&P really cares about this. Amit, I'm in the UAE close to the Strait of Hormuz. It's getting real. I've received multiple cell phone warnings. Yeah, Robert, I mean, please stay safe. We saw those cell phone warnings go out about 2 hours ago. And it looks like it was for a reason. Thankfully, 3 of the missiles have been intercepted. But obviously that's not a good thing or a good feeling to have if you are living there at the moment. NVIDIA loses 197. We are at 67 on fear and greed. It was at 69 last week, so down a little bit. 65 now. Yeah, I don't know if markets ignore this one. Crude back above 104.20. We're going to see how the U.S. responds to this as well. See if we have any coverage on this. This one seems to be the biggest form of escalation, quite frankly, in the past couple of weeks that we've seen. Because Iran kind of held back against the proxy attacks basically throughout the ceasefire. There was a few, but they were not that important. Wow, Bill Ackman's about to be on. Pump up Pershing Square, baby. NVIDIA's the new grab. Oh my gosh. Where is this? PSUS 4257. So how much did they raise? They were trying to raise $2.5 billion. I wonder how much they actually raised for this. Obviously, the IPO wasn't super successful. PS, wow, down 11% today. Market cap of 13.5. Again, the expense ratio on this thing makes no sense to me. Amit, are you annoyed NVIDIA hasn't been doing as well as AMD in the last year? Not really, because again, I started buying NVIDIA at around 115, 120. But you got to give props where it's due. AMD has absolutely destroyed NVIDIA this year. And, they deserve all the credit. They deserve all the praise. So NVIDIA continues to be cheaper than AMD. It is at the heart of this AI revolution. So I've been very happy with the return. But, past 5 years, NVIDIA has massively outperformed. Past year and a half, AMD has massively outperformed. So I don't think of them as that competitive, though. I know people like to have beef between them. I think the whole market's big enough for them, Broadcom, everyone to succeed. It's just AMD has done way better this year than NVIDIA. All right, now markets are starting to fall. S&P 0.38%. There you go. Oh, wow. Iran showing footage of firing their cruise missiles. Wow. So they definitely did this, and they want everyone to know they did this. Again, trying to tell their people they have strength in this. This is from the state media agency. Now, so here's the question. Is that against the U.S. ships trying to pass through the Strait of Hormuz, like was reported this morning, which the U.S. denied? Or was that into the UAE? NVIDIA about to lose 195, folks. My goodness. It looks fake. Yeah, they definitely could have had a better camera. I mean, I know Iran is sanctioned, but they probably have 4K cameras, right? Or at least 1080p. But it might not actually be fake if the UAE is literally saying we detected 4 missiles and intercepted 3 of them. And if this is the video in which they shot those missiles, then that's where the market has to figure out how real this is. UAE says a fire has erupted in a petroleum industrial site following the drone attack from Iran. That's not good. IRGC spokesperson says vessels violating regulations announced by guards in the Strait of Hormuz will be stopped by force. Okay. Market's officially not liking this crude. Back to 105.50. All right, so who's buying the dip? This is our dip, right? This is enough of a dip. Where's AMD? 340, 341. That's our dip. 5.2%. Everything just goes up. We can buy the dip, right? This is enough. Where's Micron? 590 to 579. That's our dip. That's our dippy dip. Where's Palantir? Palantir 146. I'm joking, by the way. I'm making fun of the fact that these stocks are still up so much even after going down on this news. But ironically, this literally, I don't know if it's a dip buy, but it might actually be a dip buy if this news ends up not being that relevant, not being that important. I mean, it seems kind of aggressive on the headline. We got to get more details. But will it continue to be? Ackman, he's live. Let's see what he's saying about Pershing Square.
Woke up with 10,000 shares and they're like, oh my God, in order to settle the trade, I got to sell this before the end of the day. So we've had sort of a onslaught of selling. I mean, no one invests $50 to get 2 securities to sell them at, a discount to that. It just didn't make any sense to me. But I think it was sort of more of a technical kind of factor. And the stocks are kind of regaining their footing and
are institutions
recovering.
selling?
I mean, you never know who's actually selling, but I don't. Yeah, I think it's mostly the retail investors who got a bigger allocation than they thought they would get.
So you still raised a few $1 billion. $5 billion.
Yes.
How long will that take to deploy, and how are you thinking of doing that?
So we're deploying it as we speak. Actually, we're about 35% deployed. So we invest in very liquid companies. We're actually, like the prices of where things trade. And we have kind of obviously a plan on how we intend to deploy the capital.
You like the prices of where
stocks are today.
Where stocks are today.
Yes.
I was going to ask you about the overall market and how you're feeling about valuations right now, because we've had quite a run up.
Interestingly, despite the overall market move, I think stocks are still, the companies we like are pretty cheap. When people compare market multiples, today we're maybe something in the low 20s, 20, 21 times earnings, something like this. And while the market average is 16 or 17 times in history, the average company of 20 years ago is very different than the average company of today. I mean, these are market cap weighted indices. It used to be really big companies couldn't grow very quickly. Now the biggest companies are among the fastest growing, high quality businesses in the world. So the mix of the market is much higher quality, much faster growing, much better businesses. So if you're paying a low 20s multiple on an overall market basis, it can be cheap.
Good deal. What's your highest conviction idea right now?
I don't know if I could. It's like kind of ranking your children. I'd rather not point out specific ideas because we're in the midst of deploying capital.
Okay.
I'll pass on that one for now.
When you have one.
Yeah.
But AI trade. I mean, you're exposed there. You've liked Alphabet, Meta, Uber, right? Where do you?
First of all, every company is an AI company today, and if you're not, you're going to fall behind. Right.
They all say they are, but how do you determine which ones?
The key is
are real?
AI going to disrupt you, or is AI going to enhance your business? And I think for the kind of the market leaders, in many cases, AI is a huge asset. Meta, has talked about much. I mean, I've talked to customers of Meta that they're earning a much higher return on their ads, which obviously means they're going to buy more ads. Obviously, very good for Meta. I mean, AI in that case, very powerful, pro-growth technology.
You're not worried about how much Zuckerberg is spending. The stock sold off after earnings on that, and questions about really what that future vision is around AI because they don't have the enterprise cloud business.
I have a lot of confidence in Mark Zuckerberg. He's been a pretty good, excellent allocator of capital over time. People question his WhatsApp purchase. You go back in time, all the various what looked like expensive outlays generally turned out okay.
Yes.
And again, we hear from the customers that they're getting better outcomes from Meta-related advertising. The company talks about the earning very attractive returns on investment.
Ackman trying to pump Meta. He's in at 625 with $2 billion. We'll see on his latest disclosure if he bought more, but this is one of those names outside of Amazon and Google that obviously just hasn't performed. Oil still going up, S&P still going down, VIX up 8%. So this news out of the UAE still affecting the markets right now.
Investment, we like companies that can earn high returns on capital and are investing into that.
Fannie and Freddie aren't really AI companies,
No.
but
by the way, they will be big beneficiaries of AI.
Why?
Well, one, they can run their businesses way more efficiently, I expect, right? If you think about mortgage securitization, a lot of this is documentation, legal paperwork, things that AI could be very increased productivity, and then just underwriting, assessing the quality of a loan book, things like this. You absolutely could be a meaningful unlock in terms of profitability.
What's your expectation at this point about them going public?
Well, one, they already are public, so people forget this, right? They're listed in the pink sheets. They're not listed on the New York Stock Exchange. I think it's.
But really being unshackled from the.
Unshackled, I think it's high on the president's list. I know the president put out a tweet over the weekend about Fannie and Freddie, so it definitely seems to be top of mind for him. But we're patient. Obviously, been patient because we've been involved in these investments for a while.
What's a win there? I mean, is there still some level of government support? Like, how do you ultimately see this playing out?
The simple solution for Fannie and Freddie is the following. So the most important thing that needs to be resolved for the existing shareholders of Fannie and Freddie is that the government has been repaid. The government injected $191 billion into both companies. Government got repaid $301 billion, which is that preferred investment plus almost a 12% interest rate. So the government got more than it was contractually owed. Meanwhile, the $191 billion plus a couple billion of upfront payments sits on the balance sheet of the company as if it's never been repaid. Those payments have to be acknowledged by the government. That's kind of step one. Once you do that, now you kind of extinguish the balance sheet line item. You account for the payments on the preferred. You now have effectively companies that are very well capitalized. The government exercises the warrants it owns. It gives the Trump administration $7.2 billion. shares of both companies, and then you list on the New York Stock Exchange. And those 3 steps will unlock hundreds of billions of value. So I think the probability of that occurring, I think, is very high.
Are you in touch with the Trump administration on this?
I have been.
With the FHFA?
I've talked to everyone.
Commerce?
Yes, I think it's inevitable. I think it will happen. I just don't know. The president's been busy, but he'll get to it.
You think it's a
And then I
priority?
think the step from there is ultimately they have to be released from conservatorship.
Yes.
But vast majority of the value is unlocked with just the 3 steps. And then the president has time to work with his team to reset the capital rules for the companies and for them to emerge as independent, non-government controlled enterprises. But where the government ultimately still provides a backstop in the form of, I think the senior preferred should stay outstanding as a bit like a line of credit, but it has to be paid for. I don't think it'll ever get drawn, but just that incremental or that important government backstop beyond the fortress balance sheet that they need to hold will make all the mortgage players very comfortable.
I mean, the stock.
So much for my not
like,
talking about individual companies.
Well, I think the market likes what it hears. Big move higher in Fannie and Freddie, but it sounds like you're pretty confident and you're as bullish as ever.
Absolutely.
On both.
That's crazy, dude. She's like acknowledging that Ackman's pumping it live as it's getting pumped.
Very, very much so, yes.
Speaking of the president being busy, he signed an executive order last week that I think you had a lot to do with the idea. This is on the retirement savings. It's been a huge issue for you. And so what they're going to do now is try to increase the access, I guess, for people to sign up.
The problem is we have 54 million Americans in this country, that hardworking Americans that don't have some form of a IRA or 401k or a savings plan. And actually there are government resources available. There are something called the Savers Match, $1,000 for people to open an account and save for their future. And if you only make money when you're working, i.e. you're an Uber driver, and when you're not on, you're not getting paid, you're going to fall behind. You can't have a world in which 60% of the company gets excited when the stock market goes up and 40% is resentful. And so what the president announced is that basically, in effect, 401k plan for every American.
Right.
And something called
contribute to it, though. They're not
yes,
going to be
it's not a
people
gift.
live paycheck to paycheck.
Well, it's a matching program, but like many companies do for their employees. But if you're an Uber driver, if you're a restaurant worker, if you work for a company that doesn't have the kind of plan, this is the, I call it the Trump savings plan, or the American, I think they call it the American Dream Accounts. It was not my idea. Actually, an idea of Alex von Furstenberg. I don't know if you know Alex.
Yeah.
I just pitched it to the president, and he liked the idea, and it's moving forward. Will be launched beginning of next year, and I think it will be an important milestone. I mean, there are other, for example, Australia has their superannuation system.
Mm-hmm.
30 years ago, Australians did not have any meaningful savings. They began the program. Now the typical Australian has a bigger money put aside for their retirement.
All right, so Ackman happy with the Trump accounts. Pretty much every business executive has been. Fannie and Freddie getting a bit of a move right here. Didn't say anything too crazy about the other names. S&P new low of day. Another UAE alert going off right now. UKMTO, we received a report of an incident 14 meters west of Mina Square. Received information from a third party that a vessel was on fire in the UAE. Multiple Iranian ballistic missile launches detected from Bushehr, Iran. We don't know if those are the same ones that the UAE is talking about or if those are new ones on top of the UAE. Wow, 30-year Treasury, 5% for the first time since July. It was close to that last night. Look at that, 5%. The 10-year is probably 4.4. The 10-year is 4.436. This is part of what I talked about in that article last night on Substack. Just, the equity risk premium. The equity risk premium is how much you're expecting to get from the S&P minus the 10-year Treasury. And if the S&P compounds on average 8% and it's already up 5% for the year, well, then your average return that's left is 3% because 8 minus 5 is 3. If the 10-year is giving you 4.5 for free to do nothing, why would you take the risk of buying stocks? The equity risk premium becomes 0 because you're going to get a better return without more risk by just buying bonds, which would help those yields come down. Now, if you think the S&P is going to compound way more than 8%, which over the past couple of years it's been like 15%, then obviously there's a higher risk premium. But if that 10-year keeps spiking up, it eventually will take some money out of the market, especially if stocks go down, because people will be like, well, why am I taking a risk in Meta when Meta's down 7% for the year and I can get 5% for doing nothing? So that is the issue with the bond yields, right? It's not even about refinancing our debt. Like, honestly, our debt is imaginary. Like, the number is so ridiculous. I don't even think, like, the deficit 40 trillion debt. What does 40 trillion in debt even mean at this point? Like, that number is irrelevant. The broader problem is these bond yields take the flow away from other assets, risk assets, because the risk-free assets are giving you a pretty decent return without taking any risk. And if you have a couple $1 million and you can get 5% on it for doing nothing, you'd be happy with that, right? So I think that's the broader issue with this 10-year spiking. SPY 717 down 0.5%. I wish my debt was imaginary. I don't literally mean it's imaginary, but again, like, functionally, whether it's 40 trillion or 50 trillion, at what point does the US economy break because of our debt? And I don't know what that, I'm sure people in the 90s thought if we hit 10, 20 trillion in debt, it's going to be over. But now we're at 40. It is not going to slow down. If Doge couldn't slow it down, then this thing's probably headed to 60 by 2040, which is, I think, the estimates. And hopefully the country survives. But in the meantime, these yields spiking up is not the best thing in the world. Yeah, the interest on the debt is also what kills us. What does all this mean for small caps? This is not good for small caps because, well, small caps down. It brings up the argument about a rate hike, which would be decimating for small caps. Now, I don't actually think we're going to hike rates, but if this 10-year keeps pumping the way it is, I mean, remember, Kevin Warsh is a hawk. He can become a dove, but he is by nature a hawk. And if he gets confirmed, once he gets confirmed, Trump can't do anything. That's the thing. Remember, Trump picked Powell back in 2017. He hates him now, but he picked him. So the idea of Trump and Warsh's relationship going sour, to me, is very possible if Warsh starts to just focus on what he thinks is the right path. And if he thinks hikes are the right path, which, again, I don't think that's why Trump put him there. But if the situation gets that bad and he does that, Trump can't do anything about it. So the question then is going to be, where is oil relative to the 10-year? And then what does that mean for equities? The VIX spiking right there, 9% up on the day. Iran struck the Fujairah oil export zone in the UAE. Fujairah is currently the only oil export outlet for the UAE. Well, that's not good. Flights have been suspended at Dubai and Shahar airports since a few minutes ago. That also is not good. Well, VG's flying. I would imagine it is. VG, there you go, 8%. This trade has still stood over the past couple of months, even though it's not at 17. I mean, it is that hedge when things kind of go down. SoFi, are we down on SoFi? And FinTech goes red. How about Hood? Hood at least holding on because of BTC. BTC's got to be below 80, right? Yeah, just below 80, 79.7. Hard for Bitcoin to go up with the 10-year up. Kind of feels like a day in March, except we're at all-time highs, but kind of reminding me of actual headlines that the market cares about today. Because we've had stuff similar to this, not as aggressive, but stuff that's relatively similar. The market did not care. Like, imagine the S&P was making new all-time highs today, even after all these Iranian strikes on the UAE. It would be a total disregard for any of this. Why is AMD down? I think there's AMD pre-jitters before earnings, to be honest. Like, that's the real reason, which I think you should want it to drop a little bit going into the print. But look, when things get risk off, people sell the stuff that they're up a lot on. Like, it's pretty logical, right? So if you bought AMD at even 320 and you're like, you know what, screw it. I don't really want to take a chance on earnings. I'm out at 340, then made $20. And obviously that's selling pressure on the stock. Qualcomm still down 4%. That could also be affecting the broader market. Sam says, what's Iran's problem with our gains, bro? I don't know, Sam. but this war is not necessarily resolved yet. I bought some SPY puts 720 for next week on Friday. Market seems too complacent to the Iran tail risk. Yeah, the inflows on QQQ puts last Friday actually were pretty aggressive as well. And I also think that was primarily for the reason of, hey, like we're at all-time highs. We don't have to go down. But if we do, a little protection there is not too crazy. Iran still holding 50, up 9. All right, so that is it for me. We will be back at 3:45. The majority of the market close today, obviously, is going to be Palantir earnings. I'll be here with Arnie and Amir. We will probably try to cover some of the other earnings, but realistically, we're not going to get to a majority of them. Palantir will be the main focus. We'll see how the market reacts. Not the best macro backdrop to report on, given this Dubai headline. Hopefully, it doesn't get worse. But I think Palantir's destiny is in their hands today, and the level of earnings beat they can put up, which I think is going to be pretty aggressive, should be what the market ultimately judges them on. Wow, we got some photos on this now. This is the oil industrial area for UAE's only area of current oil exports. Oh, that looks ugly. Wow. Okay, I imagine the White House is going to have to respond to this pretty soon, probably in the press secretary briefing of what they think is happening in the UAE. Also, I mean, this is a form of escalation. It's not escalating with the United States directly, but it absolutely is escalating. And I guess now we have to see what Trump is going to potentially say about it. Okay, cool. That's what we got. Word of the day. And then I will be back for Palantir. And we will keep going from there. Yeah, that quantum name, XND, is still down 62% today. That one getting hit pretty heavily. Oh, this is not something that I have to deal with too much. Temulant. Affected by alcohol. Slightly intoxicated, affected by alcohol. The market felt almost temulant, staggering upward with no clear logic. I love how ChatGPT uses the word of the day in a market-related sentence. It always makes it more relevant, but yeah, I don't really drink often, so how do we say this word? How to say temulant? Or is it temulant? Is this even a word? Google is saying this is not a word. Temulant. Okay, now Gemini is saying it's a literary adjective meaning intoxicated or drunk. Okay, it was like, it said, did you mean petulant? And I'm like, no, I mean temulant or temulant. I don't think I'm getting the pronunciation on any of these. Yeah, this is a weird word. None of these websites are giving me pronunciation. The fact that Google said you mean to say this word is interesting. Okay, I'm not getting any pronunciations on this. Is it a scam word? Maybe. No, I did Google how to pronounce, and look, let me show you. How to pronounce look at that. It says, look at that. The actual thing it wants me to search for is how to pronounce petulant. That's crazy, bro. It doesn't even think of that as a word. Drunken AI. Yeah, the AI is being temulant. Okay, well, that's, I guess, a more uncommon used word at that point. All right, that is it for me. Thank you, everybody. We'll see how the markets keep going from there. I'll be back at 3:45. A lot of earnings this week to keep going through. And hopefully we can keep on getting some of this momentum. Thank you, everybody. Appreciate it. I'll see you guys in a few hours. Bye, everybody. Have a good one.